Assalamualaikum Saudari Dewanti.
Waalaikumsalam, Sobat Sarjana, apa kabar?
Sebenarnya ini cuman kebutuhan teknis sih menyapa, jadi kayak kita nyoba suara, tapi sebagai ajang kita berkomunikasi aja begitu.
Oh baik, Roger Bapak, Kijang 1, terima kasih. Bapak dengar suara saya tapi kan?
Dengar kan ya aku?
Dengar po, dengar.
Pak Wimboh.
So today we will start the session with the conversation. I will inform the sequence. The first is Professor Kabir Hassan, and then Professor Hussein, Dr. Taufik, Ibu Dwi Iriyanti, and Professor Mansoor, and Professor Ahmed, Dr. Mariani, Prof. Dian, and Dr. Fakarudin, and last but not least, Bapak Tastaftiyan. And right after, we will have a question and answer and the closing. But I'm sorry, Pak Wimboh, will you stay until the end, or you will just give the open speech for the
Yeah, I wish, but let me see what's going on. Today I have a double conference today, so but I spent a few minutes before left. Yeah, after my speech.
So I think it's good for us to have a documentation. So after Prof. Wimboh delivered the keynote speech, we will have like the photo session with the all of the speakers and also the participants right after. If you may to leave due to another agenda, please feel free, Prof.
Okay, that'd be great. Thank you.
So I guess for Prof. Wimboh, we do not need question and answer session, right?
Okay.
Because you don't really have a time.
Yeah. Actually, probably I can entertain 1, 2 probably question, and then if there is some more, you can write the question and then give it to me by my email or my WhatsApp.
Okay. So we'll open. Okay, Prof. So to all of the speakers, is seen by all of the participants. So when we start the session, you can see the participant screen. So in that screen, it's the screen that will be seen by all of the participants. And we will start the session shortly. Thank you very much. So Bismillahirrahmanirrahim, we really hope that our discussion will run well today. Thank you very much.
Yeah, for the speaker, how long for each speaker?
Oh, okay. Maybe some of you missed the information that I will be already delivered before. Each speaker given 15 to 20 minutes.
Are you going to introduce each speaker?
Yes,
or shall
sure.
So
I will give like a short introduction. So we will be start talking. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning, good evening, and also good afternoon to all of the participants and also invited speaker. It's such a pleasure for me to be part of this webinar. So welcome to the webinar of Contemporary Issue in Islamic Banking and Finance, organized by the UNS Fintech Banking and Center, Universitas 11 Maret, and also in collaboration with the Indonesia Financial Service Authority. So this webinar is one of the part of the agenda of 45th anniversary of Universitas 11 Maret. It's such a pleasure for me, Dian as a moderator for today's webinar. We have notable speakers that also will deliver interesting material on this issue, and happy to announce all of you that nearly 900 participants participate in this webinar. And this webinar also, if any participant have a problem in accessing the Zoom channel, you can also go to our YouTube channel to see the discussion going. So without further ado, I think let's start the webinar today by the opening remark that will be delivered by the Rector of Universitas 11 Maret, Professor Jamal Wiwoho. Assalamualaikum Bapak Jamal.
Waalaikumsalam warahmatullahi wabarakatuh.
It's good to see you, Pak.
Yes. Good.
So please, Pak, platform is yours.
Okay, thank you. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Good evening and good morning. The most honorable, the chairman of Dr. Wimboh Santoso, respectable all speaker in the webinar, Dr. Taufik Hidayat, the director Next Indonesia, Ibu Dwi Iriyanti Hadiningdyah, Director of Syariah Financial Ministry of Finance Indonesia, Professor Kabir Hassan from University of New Orleans, United States of America, Professor Hussein from University of Central Lancashire, UK, Professor Mansoor Ibrahim from in-chief Malaysia, Professor Ahmed Faruk Aysan from Ahmad bin Khalifa University, Qatar, Professor Dian Masyita from Universitas Pajajaran Indonesia, Dr. Mariani Abdul Majid from University Kebangsaan Malaysia, Dr. Fakarudin Kamarudin from University Putra Malaysia, and Dr. Tastaftiyan Risfandy from University 11 Maret, Indonesia. First of all, on behalf of 11 Maret University, UNS, it is a great pleasure to welcome you with this event. There are more than 900 participants registered here, not only coming from our university, but also from other institutions in Indonesia and outside Indonesia, including Malaysia, Qatar, France, Lebanon, Arab Saudi, Morocco, Turkey, UK, United Arab Emirates, Australia, Bahrain, Oman, Egypt, Libya, and Pakistan. This event is organized by the Center of Fintech and Banking, UNS, a Center of Excellence in Science and Technology in UNS, that granted the first grade in the assessment of Ministry of Education and Culture in 2020. Please give applause to UNS Fintech for this achievement. This event is also part of agenda for 40th University of UNS, which will be celebrated next week. Today, we will study and learn especially from Professor Wimboh Santoso and all prominent speakers in Islamic banking and finance. The speaker will discuss various contemporary issues in Islamic banking and finance, and we will to have a great knowledge because some of them are from United Kingdom, Middle East, United States, and Asia. The Islamic banking and finance have become one of main focus in the Indonesia government in the last several years. Recently, to improve Islamic banking penetration in the Indonesia banking market, the government from a merger of 3 state-owned Islamic banking created and the new college Bank Syariah Indonesia or BSI Bank with the total asset with 240 million or exploited in 16 billion dollars. The BSI Bank become the 7th largest bank in Indonesia. The government expects in the next 5 years, the BSI Bank could become 10th largest Islamic banking in the world. We will respect from speaker today about how this Islamic finance and banking work in today's world. This is because implementation law in the current would not only some just or fatwa from Islamic scholar, but also the support from Muslim or the main population in Indonesia. As we knew that 87% of Indonesia population are Muslim, but Islamic banking and finance penetration in Indonesia is relatively small. Our university has committed to contribute in the sustainability dialogue, not only at the national level, but also in the regional or international environment, as we were fully aware that today published work contribution of university should be promoted a wider spectrum. We hope that you enjoy the event today. Once again, thank you for all speakers who given the time to share the knowledge to us, and also thank for participation. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Thank you very much, Prof. Jamal, for such insightful opening remarks. And as Professor Jamal said, this webinar today is a part of the agenda of 45th anniversary of Universitas Blas Maret that organized by the UNS Fintech Banking and Center. And along with this activity, actually, the UNS Fintech Center also has another agenda. It's a Digital Innovation Challenge that could be very interesting, maybe, to be informed to all of the students and also the academia out of there. So thank you very much, Prof. Jamal. And as also stated by the Prof. Jamal, how the Islamic finance becomes growing each year and gave another contribution to the economic, the whole economic as well. So as this webinar, also in collaboration with Indonesian Financial and Service Authority, the keynote speech will be delivered by the chairman of Indonesian Financial Service Authority, Professor Wimboh Santoso. So let me meet him. Good evening, Prof.
Okay. Good evening, Iriyanti. Right. Okay.
It's such a pleasure to have you. So please, Prof, platform is yours.
All right. Okay. Okay. First of all, I would like to say hello to a few people here. First, for Pak Rector, Prof. Jamal. Yeah. Good evening, Pak Jamal. Yeah. Then also other speakers. Yeah, we have a list of very prominent people here. Professor M. Muhammad Kabir Hassan from New Orleans University, USA. In the US must be in the, I believe in the morning. Yeah, good morning. Yeah.
Yeah, it's a very good early morning, 6:30 a.m. Yeah.
6:30 a.m. Okay, good morning. And also Professor Hussein Abdul from Lancaster, UK. I believe in the afternoon. Good afternoon, Professor.
It is in the afternoon. Yeah, good afternoon.
Yeah. Good afternoon. All right. And then Professor Mansoor Haji Ibrahim from Malaysia, in Malaysia. I believe it is evening. Yeah. Okay. Then Professor Ahmed Faruk Aysan from Qatar. I believe in the afternoon in Qatar, is it? Yeah. Good afternoon.
Good afternoon. Good afternoon.
Okay. Then Dr. Fakarudin Kamarudin from Malaysia. Good evening, Dr. Fakarudin. Yeah. Then Professor Dian Masyita from Pajajaran. Ya, Bu Masyita, apa kabar?
Baik, Pak. Alhamdulillah.
Dr. Taufik Hidayat from Connect Indonesia. Selamat sore. Salam. Ibu Dwi Iriyanti Hadiningdyah from Minister of Finance. Ya, selamat malam Bu Dwi. Ya. And then Dr. Tastaftiyan Risfandy from 11 Maret. Ya, selamat sore, Pak. Ya. Then of course all of the participants, yeah, everywhere in the US, probably in Europe or in in Asia. Yeah. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi.
Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin. Assalatu wassalamu ala azrabil anbiya wal mursalin sayyidina wa maulana Muhammad wa ala ilihi wa sahbihi ajma'in, amma ba'du. Honorable speakers, Pak Rector, and ladies and gentlemen, I would like to put highest gratitude to Almighty God, Allah Subhanahu wa Ta'ala, for His grace and guidance to all of us, yeah, especially who attend this event, yeah, on the web seminar. Salawat and salam, prayer may remain devoted to Prophet Muhammad Sallallahu Alaihi Wasallam, and also his family, companion, Muslim around the world. Hopefully we are addressing to him, then all us will get syafaat in the hereafter. Amin. Ya Rabbil Alamin. Price of us, the grace of Allah Subhanahu wa Ta'ala are still given opportunity to meet virtually, all of us. And then actually the topic is very important. We call it contemporary issue in Islamic finance and banking. This topic is very relevant this time, especially in the time of economic recovery from the COVID-19, for the time being. I would like also thank you to the Fintech Center and of course the 11 Maret University who established this event. Then actually I would like really keen to involve any event, discussion or seminar, especially that designed by University of 11 Maret. So I believe especially also happy anniversary Pak Rector for 45 years for Universitas 11 Maret. I think it's not too old, but the achievement is quite amazing. With 45 years old university now under the top 10 rank of university in Indonesia. Hopefully will increase. Probably Pak Rector next year or next 2 years will be top 5 rank in Indonesia.
Amen.
And then we're ready to support in any way. Then, ladies and gentlemen, I would like very brief in my speech here. Actually, first I would like to share about Indonesia because mostly speakers are not originated from Indonesia, so it is very important to give a background about Indonesia. Then I would like to share a little bit how COVID affect to Indonesian economy. Then, in the third part, I would like to share how we design on the policy of Islamic or Sharia banking in Indonesia going forward to be a very important part in the economic recovery going forward. Let me start with a quick background of Indonesia. Indonesia is a huge country. I think some of you understand this. The island, even I never counted one by one, but all the literature references saying that the total number of island of Indonesia is 17,500. You can imagine. Each island has different language, different tribe, and then sometimes it's very difficult to travel to one island to other island. Then I think the north part of city call it Sabang. And the south, the different part is Merauke. On the top part is Miangas and Turote. That's actually a city that we call it to remember for us from end to end, from the north to the south and to the east to the west. Then the population is 270.2 million people by September 2020. Then 70.7% population classified as a productive age. Then 50 million of people categorized as middle income people. And 102 million people are middle age. So actually, what we are going to say is, look, people are normally dominated young people. 87.5% population, or 230 million people, they are Muslim. And then 55.9% of population live in the rural area, and 44.1% population in urban area. Then Indonesia is economic growth in Indonesia is based on the domestic demand only. Then actually consumption dominated the demand, account for 54.9% of GDP. So you can imagine it is different from other countries that probably population more, and then the economic growth is really depending on the international trade, but it is not the case for Indonesia. So I think since many people are living in the rural area, and then they are Muslim, then the isolated area, so the impact of COVID on the rural area is very minimal. So the COVID has already affected significantly in the city, as like Jakarta, Surabaya, Semarang. But for the rural area, they are isolated. Traditionally, has been many years, and they are very isolated from visitors. So I mean that is a potential, to be developed from the rural area. And then also I would like to say that about the COVID in Indonesia. Positive cases has reached 1.3 million cases. With the death case reached 36,000 cases. And then mortality rate, only 2.7%. It is relatively low compared to other countries, I believe. Then isolation, locking down, social distancing is everywhere in Indonesia. Micro lockdown is also implemented depending the situation in the area. So actually that is the strategy how to minimize the impact of the COVID to the people in Indonesia. And everybody understand the impact of our isolation, our what called locking down, partially locking down, actually restrict people to move around as usual. So that why the impact is significantly to the sectors as like tourism, transportation, restaurant, then also some of the shopping center. So those sectors very highly affected by the COVID. So that's why the economic growth in Indonesia, as also everywhere in the world, has been affected significantly. But thanks God that Indonesia is not as high impact as other countries. Look, I believe compared to only China, Vietnam, Korea, that their impact is very minimum. Indonesia, by end of 2020, I think the GDP is negative 2.19. They compare to other countries that actually normally more than 5%. So then all of the global multilateral development bank estimated that Indonesia will be recovered by this year, 2021. I think the growth for Indonesia is estimated about 4.5 to 5.3. That is according to the consensus, and that actually has been announced by the government. But also other countries in the world, they are really heading to the recovery, especially US, China, Vietnam, Korea. So normally a large population, they have a better situation and then better chance to recover quickly. So then I would like to give a hint for what's next. Leading indicator that we monitor closely, both global and both Indonesia, actually give some positive sign, especially in the vaccine distribution over the world, including Indonesia. So Indonesia, with 270 million people, we starting last year searching how to get the vaccine globally. Then last month, yeah, Indonesia distributing the vaccine to the people. Even myself has been vaccinated, you know, just a few days ago. Then looks fine. Yeah. Then some people has been the second shot. Yeah. So that's provide more optimistic, you know, tone to the people how to recover by this year. Yeah. Some of the statistic also shows that purchasing manufacturing index improved from 51.3 to 52.2 in January 2021. That is the indication that the manufacturing has been, you know, better. Yeah. And then also car and motorcycle sale increased in the third quarter 2020. And then I believe it is growing. Yeah. And then consumer index also increased. By February 2021 is 85.8, yeah, which is increased from 84.9. Yeah. Retail sale index also increased February. Yeah. Used to be in February from -4.3 to -0.7 month to month. So actually, a lot of leading indicators show ours. Yeah. I think the economy Indonesia will recover by 2021, or at least the worst case will be 2022. But of course, depending on the game changer, what we call game changer, is the vaccine. Yeah, since we can distribute the vaccine quickly, I believe we can really have a chance to recover very quickly. It's very clear. Yeah. Then let's me how the government really drive the recovery. Of course, a lot of policy has been derived initially by 2022, how to be survived. You know, a lot of regulation, prudential regulation has been moratorium for the implementation. Then we really control the volatility of the stock market by a lot of many policies that I'm not going to discuss today. Then also government subsidy for the SME has been implemented since 2020, and also government guarantee scheme for the borrower has been implemented. Then for the monetary policy is very accommodative. Yeah, for the interest rate is pushed down lower. Then also reserve requirement has been kept some forbearance. Yeah, and then provide liquidity in the market. Yeah, and then budget deficit has been quite, you know, as compared to the normal condition is higher. You know, I think last year 2020 the deficit was 6.3%. Yeah, and then even the budget this year 2021 is -5.7. So those things basically is an orchestra by the government policy. Yeah, really to how to survive 2020 and how to recover by 2021. You know, for us, from OJK, we really keep moratorium for loan classification and also posting the provision for non-performing loan starting last year and then until 2022 March. So that why all those things really combination how to survive, and then finally we start now how to recover. Even a few weeks ago, government also gave for the tax for the housing. Yeah, that has been announced starting March 1st. Yeah. On the housing tax, yeah, for people for buying housing and also for motorcycle and also car. Yeah, actually really to jumpstart the recovery of economy. Now it's still very primarily how to monitor the impact, because just announced by last week and then effectively implemented by March 1st, just recently. So with the method, hopefully this policy will give us really a jump start, how to restart the economy, through the motorcycle and also the auto loan and also the residential area. Then hopefully will create multiplier of the recovery of the economy. So we start what's the role of the Islamic banking here, or Sharia banking? Yeah. First, I would like to share some statistics on the Sharia banking. Market share of Islamic economy in Indonesia considerably small, with only 9.89% of the total financial asset. Sharia financial services still maintain relatively high asset growth in 2020 with 22.79%. Compared to year 2019, only 30.80%. But Sharia banking also maintained a good financing growth 2020 with 9.5% compared to the total loan in the total industry, which is minus 2.4%. Why? Because Sharia business normally in the rural area, as I mentioned before. So the economic activity in the rural area is fine. So unaffected. So that why the growth on the Sharia services not affected by COVID compared to the total industry, which is minus 2.41%. In terms of loan growth. Then, I believe after the COVID area, the conventional banking services will be recovered very quickly. Then probably the growth also will be very high. The question is how really to design of the Islamic finance will dominate in the future of the business in the financial sector and also all the business in Indonesia. And that is the question. Judging that the share is very small, so we should have some very structural reform in the Sharia banking area. Islamic not only in the Sharia banking, but also in the Sharia financial institution, as well as in the Islamic economic area. But for this time, I would like just focus on the financial sector area only. Then we call it the roadmap on the financial services master plan. With this inside of the financial services master plan, we have a Sharia banking development roadmap. But of course, it will be followed by non-banking and also the capital market as well. For this plan, we have three focus. First, strengthen the institution. How can we have the institution that is very strong, very competitive, and then can access to everywhere quickly, which is normally the people, in the rural area, which now we don't need physical presence anymore. And it means that we have to design the digital services for the Sharia banking. So the digital services will be quickly, good quality, and then quickly access to the wide area. In the same time, no limitation of time. Digital services is 24 hours. So anytime, everywhere, you can get the services. So how to bring the Sharia banking in this kind of situation? But of course, it is not enough. We also create the ecosystem in the economy, Islamic economy. Yeah. The ecosystem is called how that we develop with the halal industry. It's very important. No, because the financial sector is only the financial services. But how to create the environment is very important. Yeah. Would you like to back to the previous slide, please? Yeah. Then, of course, on top of that, the halal industry, we also get some synergy with how to create the social charity effort in this case, because normally how to create cheap funding and then cheap lending, financing, we should base on the social activity on this case, not commercial. Yeah. Then also we have to create synergy with under government agency and also community as well. In terms of how we bring those things in the one environment, really to create an ecosystem, and then financing to the people in the rural area, which is not the very commercial but more social, and then how we get the funding that not really commercial funding. It is must be social funding as like wakaf or probably a donation, and then how we collaboration with the social charity institution, something, So that kind of the ecosystem that we have to develop, not commercial basis. I think the third part is about the how to also create the demand, educate the people, and then a roadmap on the regulation and also, some kind of the corridor in terms of the ethic and code. So in order to protect really the customer, it's very important. So those three areas is very important. Then actually it is not only the job of OJK, but the collaboration with the government agency and then private sector charity and also some of the social organization, charity fund. And also actually we can create some of the services. First from the institution basis will be competitive, digital, quality, high quality services. Then from the ecosystem, bigger ecosystem, then basically actually about the ethical code and also education and literacy to increase the literacy of the people. So that is the roadmap that we design, and then actually hopefully with this kind of the effort, I think the Sharia banking will be a major player in Indonesia. Then actually we also collaboration on the non-bank financial institution product and also the capital market. So we create a P2P lending on the basis of Sharia, and also we create security crowdfunding on the basis of Sharia. Then also insurance, takaful and so on. So actually that's actually some orchestra that we create in Indonesia. I would like to share a little bit some evidence. Then first, actually we have some quick win in Indonesia, and then we develop micro wakaf bank. The micro wakaf bank is actually a bank. It's not commercial. It's more charity bank. The funding is from the charity. Then financing is from the people, the poor people, and from the micro. And then the return is only around 3%. That is actually basically as the to support the administrative fee for the charity bank. So that's kind of the a quick win that we create in Indonesia. Now we have 60. The number is 60 spread out in Indonesia, different island. Yeah. Then actually it's more not commercial, more. And then actually also we not only financing, but we also provide some assistance to the borrower about how to be more productive, yeah, in the business, and also anything that they need, we support with some of the guidance and also monitoring. So that's actually evidence that we have in Indonesia. Then also we we part of the government program in terms of the how to achieve the sustainable development goal by 2030. Yeah. Then we in the village we part of this effort. Yeah, basically also we educate the people how to be comply with the environment. Then hopefully then we can ensure that any business in the rural area that financed by the Bank Wakaf Mikro, for instance, will be comply with the environment. So those kind of the roadmap that we have, yes, then I believe this material has been actually can be shared to everybody in this the participant of the even to public. Yeah. Then even we have a full document any item that we have here. Yeah. So hopefully with this kind of this sharing information from myself, yeah, will be a good as a basis understanding the how we develop the Sharia banking in Indonesia, even part of the ecosystem of the Sharia economy, Islamic economic in Indonesia. Yeah. Hopefully with this information will be useful for everybody. And then again, thank you for Universitas Plus Maret for inviting me to deliver the speech this evening, and also thanks for all speakers who really participating in the seminar. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh. Yeah.
Waalaikumsalam.
Waalaikumsalam.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, Prof. Wimboh, for such a very interesting keynote speech that will give a briefly and quite comprehensive information on how the Islamic banking and finance, particularly in Indonesia, as quite a definitive part of how the Islamic banking and finance could participate in joining to build the whole economic itself. And we can see that how the commitment from the government, particularly in this area, is Financial Service Authority or OJK, creating the Sharia Banking Development Roadmap 2020 to 2025 to maximize the potential that we have, as Professor Wimboh mentioned, that how Indonesia is uniquely different by the other country on how addressing the COVID-19, because the effect of the COVID-19 is not necessarily that severe compared to another country, and how the Islamic banking and finance, although the market share is quite small compared to the conventional finance, but we can see the growth, it's in a good shape, and also the commitment of the national government also that big to create a bigger, because we can see that how the potential from the Islamic banking in Indonesia itself. So thank you very much, Prof. Wimboh. And I might invite maybe some participant, I'm pretty sure has a lot of question in mind. So if you have a question maybe for Professor Wimboh, he could agree to answer one or two questions, because due to the time limit and another agenda, I'm pretty sure he has a lot of things to do after this. So Professor Wimboh, there is a question from the UMB Purwokerto. What the grand design of the Islamic bank socialization to increase Islamic bank literacy, especially for the younger generation? Please, Prof.
Okay, since you are in Purwokerto,
yes,
which is contact the OJK office in Purwokerto, and then raise your attention, and then I believe will be a lot of opportunity really to have collaboration with OJK in terms of how educate of the people.
Okay.
Then several platform has been designed, especially if you are interested to establish Bank Wakaf Mikro in Purwokerto. I believe we don't have any in Purwokerto. So please come to the OJK, local OJK, and explain by yourself. So actually, Bank Wakaf Mikro is simple. You know, I think the design is dedicated for around 3,000 borrower.
Okay.
But I think the nominal, the money is not too big, only 1 million until 3 million. Then I think the sharing return is only 3% per year, not per month, per year. So if you borrow 1 million, then you have to follow the weekly meeting, holakoh mingguan. Yeah. By borrowing 1 million, you only bring around 25 or 26,000 rupees every week. You can imagine. I think I believe in Purwokerto 1,000 you can be as like jualan bakso, for instance. You know bakso. So this is enough. I think then actually that's kind of business that we concern, because normally we should cover a lot of people, even though it is small, and then we should help and educate the people in any way, and then we should probably put their product in one ecosystem that we create. So even we create a marketplace called UMKM. Any product on those people, I just put in the UMKM, you know, and then everybody over the world can access and buy it. So of course it's not really only for high level entrepreneur, but only dedicated. We focus on the small entrepreneur, informal sector. So that way we need really to support. So she really just come to OJK Purwokerto, explain and ask more detailed question, and also will be guided by somebody there. Okay, that's only my answer.
Thank you very much, Prof. Wimboh. I think it should answer the question from the participant. So I'm pretty sure a lot of question is in mind on so many participants, but due to the time limit, Professor Wimboh unfortunately are not be able to join until the end of the session of this webinar. So thank you very much, Prof. Wimboh. But before
but I have a few minutes, so I will just stay and listen. Yeah.
Okay, so before that, I think it's good for us to have a group photo session with all of the participants and also the speaker. So I would like to invite all of the participants and speaker to turn the camera on, please. Okay, no, it's very nice. It's very nice. So let's take a group picture together. 1, 2, 3. Once more with a big smile for sure. So 1, 2, 3. So thank you very much, Prof. Wimboh, for delivering such a
much. Thank you, everybody. Okay.
Thank you very much.
Seminar. Thank you very much. Thank you.
Thank you very much, sir.
Terima kasih, Bu.
It's such a big honor to having you in this webinar for sure.
Okay, thank you. My pleasure.
Ladies and gentlemen, let's proceed to the main agenda of the webinar today. Is the plenary session of webinar on contemporary issue in Islamic banking and finance, organized by the UNS Fintech Center and Banking in collaboration with the Indonesian Financial Service Authority (OJK). So today, as I mentioned before, that this webinar will be bringing you notable speakers coming across from the US, Europe, and also the Asia and Indonesia, of course. I would like also to invite all of the participants. If you have any question, feel free to deliver your question in the chat box, and I will deliver the question and bring up to the designated speakers right after the last speaker delivered the material. So without further ado, let's proceed to the first speaker for the today webinar, Professor Kabir Hassan. Good morning, Prof. Kabir.
Good morning.
It's good to see you here again.
Yes. Okay. Yes, good to see all of you. I see a lot of my friends on the screen. So
Okay, Professor, before that, I may to introduce you to all of the participants that may be not known you in very well. So, ladies and gentlemen, Professor Dr. Muhammad Kabir Hassan is the Professor of Finance in Department of Economics and Finance in the University of New Orleans. He currently holds 3 endowed chair Hibernia Professor of Economics and Finance, Hancock Whitney Chair Professor in Business, and Bang 1 professor in the business in the University of New Orleans. So Professor Hassan got the PhD in finance from the University of Nebraska-Lincoln, USA. He also the winner of 2016 Islamic Development Bank IDB Prize in the Islamic Banking and Finance. So it's such a pleasure to have you in this webinar, Prof.
Thank you, Diwanti, for a nice introduction. A'udzu billahi minash shaitanir rajim. Bismillahirrahmanirrahim. Rabbi shrah li sadri wa yassir li amri ahlul 'uqdatam min lisani yafqahu qawli. I see a lot of my good friends on the audience, so salam to all of you and also all distinguished attendees who are watching this presentation. So I'm going to talk about the contemporary issues in Islamic banking and finance. So you know that Islamic finance has been institutionalized in 1960s, have been practically used ever since. But Muslims always have implemented this fiqh muamalat in their personal life, even though it has not been commercialized for the last since 1970s. And today, Islamic finance is practiced parallelly with conventional financial system in many countries. Part of these things is their colonial legacy that we have been conjugated by colonial powers and imposed their financial system on us. So what we need in contemporary Islamic banking finance is ijtihad. Let me take a quote from Albert Einstein. He was asked one day, so if I had an hour to solve a problem, and my life depended on the solution, I would spend the first 55 minutes determining the proper question to ask. For once I know the proper question, I could solve the problem in less than 5 minutes. So what it means that the Islamic finance and entire Muslim world, we need ijtihad. We need to know really what is our problem, why, who, when, where, how, what, and what if, and then we find a solution. And every problem has a solution, but we have to be creative enough to solve it. So looking at the Islamic finance ecosystem right now, these are the recent metrics. By 2024, the global Islamic finance industry asset will reach $3.69 trillion. In 2019, Muslims have spent over $2 trillion on halal sectors inspired by ethical consumption. By 2024, this amount will reach to 2.4 trillion at a 5-year cumulative growth rate of 3.1%. However, there will be an 8% decrease in global Muslim spending in 2020, mainly due to pandemic on food, pharmaceutical, cosmetics, fashion, travel, medical, recreation sectors. Except for travel sector, all the other sectors will return to pre-pandemic spending level by the 2021. So what are the key factors behind the growth of Islamic economics and finance? Of course, we have a very large number of Muslim population in Indonesia. Out of 270 million, 87, about 230 million are Muslim. 1/5 of the world population are Muslim. To a degree, Muslims want to go back to their original root. They want to follow their not only ibadah, but also fiqh muamalat according to Islamic teachings. So there's a drive to ethical consumption, not only consumption of food, also investing in the ethically. The political drive is there in many countries to have strategies to have these halal products and services. So here is a slide that I borrowed in Muhammad Imran Taufik. He was recently posed the question, with over 14,000 Islamic financial institutions spread over 80 plus countries, how could they impact the global financial market? So do we know when it comes to Islamic finance, question many had in their minds, some still do. For example, what ethics had to do with finance? It is impossible to have two systems of banking. It is just a dream, never can be a reality. If we forsake dealing in interest, we'll be left out of business. How can we expand our business without taking loans? Interest has become part and parcel of global financial system. It is the same thing, only the name differ, interest to profit, only be applicable to Islamic countries, suitable in those good olden days during the prophetic era, but not in this freely competitive modern markets. So these are the series of questions we both Muslims and non-Muslim face and ask ourselves every day. But why the reason of the existence of this issue and how we can tackle this? Why would Islamic finance have issues? Aren't we following the Islamic law? Isn't there the Sharia governance standards? Sharia scholars does act as watchdogs. Are they? So not one single reason. Sharia is not a national law in many countries. Even in Indonesia and Malaysia, even the Islamic finance is big, but it is not a Muslim Islamic country. Only country probably runs according to Sharia is the Saudi Arabia, because Quran is their constitution. Conventional laws are applied to Islamic finance. Conventional experienced persons, those who used to work in the conventional sphere, come to Islamic finance and they deal with Islamic finance industry. Sharia compliance is the key focus. Bare minimum requirements are focused. So we have a big question. Sharia harmonization, the difference among madhab versus legal harmonization, because in many countries we have common law and some countries we have civil law, how they comply with the Sharia requirement. In some countries, even the phrase Islamic finance cannot be used. For example, Turkey, they do not use Islamic finance, they use participation finance. So there are some general issues that are common to all companies in Islamic finance or all components, and there are some specific issues of the components of Islamic finance. For example, you cannot have a prohibition, you cannot have riba, you have lawful activities, you have ethical moral values, you should have profit and loss sharing, you have prohibition of gambling, you have the prohibition of speculation. So what are the general issues that we face? Of course, we have lack of ijtihad, lack of innovation, Islamic finance industry. If you look at last 50 years, there are only few Islamic finance products that are in the market. But if you look at conventional space, they're coming out with products almost every week, revolving around the Sharia compliance. So we are using this legal trick to make otherwise a conventional product an Islamic product. So we are not going back to the root of the Sharia and the dominant contract that existed in Islamic history. For example, we talk a lot about sukuk nowadays, but we could have gone one of the instruments that existed during Ottoman Empire called Isham, that is more powerful, less problematic, and less costly instrument that the government can follow in order to replace sukuk. But the question is, the political realities are different. We are oblivious of the social impact of what basically Islamic commercial finance, not considering the environment and using the conventional benchmark, lack of benchmark, but AUFI recently is working on coming up with alternative, and I'm chairing that working group at AUFI. Slow in technology integration. Technology coming up is the name of the game. Lack of uniform Sharia governance code applicable. No moral law available for Islamic finance that could be localized. So the model law, I mean that model law, it can copycat everywhere. It's not like this because of fiqh difference and so on. So there are awareness among the stakeholders, including public, and lack of talent pool required for the industry is still challenge. There are numerous estimates in Malaysia, 24,000, in UAE, 50,000. So there are different numbers floating around in different countries, the lack of skilled manpower to support the Islamic finance industry. So if you look at specific issues, there are 4 components: Islamic banking, which is the 70 to 80% of the industry. You have Islamic capital market, takaful, and Islamic social finance. Now, there has been a recent study came out by Refinitiv. If you look at Islamic knowledge indicator rankings by countries, Malaysia is number 1, Indonesia is number 2, Pakistan, Jordan, UAE, Bahrain, Brunei, Saudi Arabia, Tunisia, and Morocco. And if you look at in terms of education and research, that is the main talk of our conversation today. There are 968 education providers in 2018, 445 course-only providers, 371 degree providers, they give bachelor's, master's, 152 qualification providers, and 72 countries providing Islamic finance, 77 countries providing Islamic finance education. If you look at the research, 1,786 Islamic finance peer-reviewed journal articles produced between 2016 and 18. There are 2,550 Islamic finance research produced between 2016 and 18, and also the 77 countries are involved in this research. But if you look at in terms of research, which Indonesia tops the list, then UK, Malaysia in terms of numerical number according to Refinitiv study. Now, in terms of Islamic finance education, but if you look at the research, the most research are done only in Islamic banking, then followed by Islamic finance, CSR, sukuk, takaful, governance, Sharia governance, Islamic economy, Islamic mutual fund, and Islamic capital markets. So when you look at specifically in Islamic banking, the lack of social impact products, value-based intermediation need to be considered. The social impact of Islamic banking products and services need to be identified, and products and services need to be structured based on assessing its output in this manner. Is there any problem? Can you hear me? Hello?
Yes, we can hear. Yeah.
Okay.
Everything is perfect, sir.
Okay. Lack of transparency in reporting to invest account holders. Uniform standards need to be applied for reporting requirements applied to investment account holders to make Modarib, the bank, accountable for Rabbul Mal, the customer. The lack of innovative products that reflect true nature of Islamic banking. Sharia compliance should not be given the only consideration to. As such, a mechanism to ensure that the Sharia-based products and services are offered by Islamic banks. Debt-based products more than equity-based products. Heavy reliance on debt-based products is what we are witnessing in Islamic banking today. As such, initiatives are required to promote equity-based products. If you look at takaful, issues in implementing of different takaful models, is it a charity or business entity? Related to re-takaful, not enough re-takaful providers. Unresolved issues in financial accounting and reporting, general family takaful. Family accounting, financial accounting and reporting practices need to reflect the Sharia practice. Lack of standardization. Standardization of takaful practices across the jurisdictions are required. Lack of representation of takaful policyholders in the board of takaful companies. To protect the interest of policyholders, it is imperative to have them represented on the board of takaful companies. If you look at the Islamic capital market, Sharia screening of equity, instead of focusing on negative screening, is there a possibility to merge Sharia screening with ethical investing, SDG principle, and so on? Sukuk, innovative sukuk structures are required as linking it to SRI frameworks also required. For instance, why is that we did not have a pandemic sukuk in the time of need? Derivatives, global Sharia acceptability for Islamic derivatives are required, and international IFM work in this regard also are commendable. Bit more need to be done to have uniformity across jurisdictions that could be features acceptable in Islamic forward futures options and swap according to the Sharia way. And the most important part, Islamic social finance, that equation is missing because you cannot solve the problem or link to help the maqasid of Sharia without having the Islamic social finance component to it. Slow institutionalization of Islamic social finance. Not all more social finance could be given under one roof. Islamic social financial institution need to be established. Alternatively, it needs to be blended with also with Islamic commercial finance. Accurate, convenient, and effective procedures to find the deserved recipients of Islamic social finance assistance need to be formulated. To unlock full potential of Islamic social finance and provided maximum benefit of the society, there is need to ensure proper mechanism is put in place to identify and locate the most deserved recipients. There has to be measures need to be taken to have sustainable funding. Efforts need to establish sustainable funding mechanism for Islamic social finance models. The classical notion of passively waiting for the funds need to be changed to active fund-seeking modes, like the honorable presenter previously showed the Indonesian example. So what are the recommendations that they can do? Of course, we must be aligning the Islamic banking finance with maqasid of Sharia. We merge the Islamic commercial finance with Islamic finance. We need to focus on achieving United Nations Sustainable Development Goals. We have to link with the circular economy notion that exists in conventional finance, and that is very much aligned with the maqasid of Sharia. We need to initiate new law harmonization effort, develop a model Islamic law that will give certainty in cross-border transactions. So way forward in epistemology, if we don't change, we don't grow. If we don't grow, we aren't really living. The mindset of Islamic finance stakeholders need to change. This includes not only the product and service providers, but the customers as well. Instead of demanding for a replica of conventional financing, demand for true Islamic products need to be made by the customers themselves. Risks need to be taken to introduce maqasid of Sharia-based products rather than merely complying with the minimum Sharia compliant rules. The classical mindset that products and services will change only based on demand need to be changed. Now, there's a famous saying by Edward Deming, innovation comes from the producer, not from the customers. Even the Islamic financial institution need to change the way they structure and offer the products and services. So let me talk a little bit about Islamic economics, because you're talking about the research here. Islamic economics is a social science that integrates human understanding or divine sources of knowledge into the study of economic problem. So it is a social science. It is not theology. It does not necessarily have a mandatory link with Islamic economy. Of course, it tries to solve real economic problem. It does not necessarily require to test hypotheses and theories. It could be political economic way. And it also focuses on human understanding of divine text. Now, Islamic economics must come out of the fear of trespassing in a divine order by testing and verification methods of social sciences. Human economic problem, there is scarce means and multiple ends, and Islamic economics looks for the solution for the economic problem of man that arises from the scarcity of means and multiplicity of ends. It's a positive science. The definition clarifies Islamic economics as a normative or a positive science. It is a positive science. Its findings can be used by policymakers as in the case of conventional economics. But we have to keep in mind, we do not follow the greed and competition that exists in capitalist system. We follow generosity and cooperation in Islamic finance. So because of these questions, the issue that has been lingering, one of the recent presentation made by Syed Salman Ali, I want to share these two slides with you. He put it a very nice way. The Islamic economic finance has so far not been clearly defined in its purpose, methods, and distinction. The approach followed so far has been of introducing Islamic elements within the conventional system and institutions. What are the outcomes as a result? There's a very low level of development of some key Islamic economic concepts and weak articulation of the distinction of Islamic economics and finance. And this has led to reevaluation of the existing approach. Different people find fault with different aspects of the approach and advocate rectification in various areas, sometimes suggesting new approach. And what are these 7 new approaches? So one group of scholars say that it add Islamic element within the conventional system. That's one approach. Another approach, work on institutional change, because Islamic system calls for different institutions. So we have to develop new institutions in order to have the maqasid or full fruits or spirit of Islamic finance. Third, work on the social finance instead of commercial finance, because these are the money mongers, they behave like a conventional finance. Number 4, work on environmental issues and circular economy, because this is closer to the spirit of Islamic finance. Number 5, work on Islamic moral economy at the philosophical level. A lot of people talk about you have to go to the origin, talk about morality, talk about institutionalization. So those lofty ideas. Number 6, create new paradigm by rejecting everything conventional and build on different mindset. So these are the groups, revolutionary groups. They said discard everything. But I'm not really in favor of this group, because this everything that we have earned is a human shared knowledge that we have created, and we should try to, even many of the instruments existed before the time of the Prophet Muhammad Sallallahu Alaihi Wasallam, and he has Islamized it. So we should learn from the conventional space as well. And finally, focus on the ways to address social, economic challenging and Islamic principles. Now, how important is Islamic finance education for the growth of the industry in emerging and frontier markets? What role should local and international education providers play to support the growth and development of the global industry? So if you look at, since a significant number of people in Muslim countries do not engage with conventional finance due to religious convictions, the provision of Islamic finance becomes an issue of financial inclusion and development. One of the key constraints of development of Islamic finance in emerging frontier markets is a lack of knowledgeable and skilled professionals who can drive the industry forward. An education institution can support the industry by proposing ways to make Islamic finance relevant during the present day by aligning Islamic values and principles to its practices. And in this regard, some of the issues that may be explored include the following. First, the ways in which Islamic finance can contribute to sustainable development goals for all countries. This would require broadening the current practice of negative screening, excluding the prohibitions, to one that includes positive screening and recognize sustainability and impact-related issues in decision-making. Second, with close to 500 million people living in poverty in the Muslim world, and the significant number of people with no access to financial services, Islamic finance can create a positive impact by providing services to the financially excluded. And finally, there is a need to explore ways in which the fintech sector can be used to provide Sharia-compliant, ethical, and social financial services that are not provided by the traditional financial sector. So what role should the educational institution play in increasing awareness, improving public perception towards Islamic finance? Academic institutions can help improve the perception of the industry in 2 key ways. First, they can increase the awareness and the level of understanding of the values and principles of Islamic finance among the general public by developing basic financial literacy material and programs. Second, there is a need to interact with the industry to develop workable models of Islamic financial products and practices that reflect the overall goals of Sharia. One way in which this can be done is to have more interaction with the industry to exchange ideas and knowledge to move the industry forward. To be beneficial to the industry, academic research has to be more applied, focusing on resolving the problem the industry faces in applying the substance of Sharia. And I believe this is the model INSAFE is following right now. Now, coming back to research in Islamic finance, until recently, Islamic economic finance studies had only peripheral journals and publishers as publication outlets. In the last 5 years, 3 specialized journals emerged through the Emerald as outlet, but still they have a trouble to bit longer to develop into SSI journals. Only one has been made into this list. Mainstream journal in the past did not show much interest. They still sustain mostly that attitude. More visibility observed in Islamic Middle Eastern finance journals. However, with empirical sophistication, they started to avoid Islamic economics and finance papers. A couple of mainstream journals accepted special issue in return for large amount of fees, and many still do now. And these special issues are controlled by those colleagues who want to promote their own clientage. Hence, publication in mainstream journals remain an issue, while peripheral journal publication in the West would not be recognized. So we should try to develop sophistication to overcome the prejudice in the mainstream journals by communicating with them, or at least creating our own national database rather than relying on SSCI, Q1, ABS, ABDC, and so on. Why can't we have our own Indonesian list of journals that are promoted and accepted for promotion and reward purposes? Research in Islamic finance is all over. Increase the number of conferences and workshops, increase the number of research centers, increase the number of IE degree programs, number of research students, research quality, numbers of publication. I get almost every month an invitation to join an editorial board or a newly issued journal. That's fine. The more, the better. I believe in Darwinian principle, and the good one will succeed, the bad ones will die out. But there is a lack of core IEF journals and more publication in non-IEF journals. Now, limited idea about journals that are interested in the field of Islamic finance. Conceptual papers are not attracted for the mainstream journals. Limitation of single country studies, limited data, scope of the journal and interest of editors and associate editors. There is also potential bias and how blind there should be. So I have a feeling, I have published a lot in this area. Unless you do have a data-driven paper, it is very difficult to publish in a mainstream non-Islamic journal. But at the end of the day, when I look at my published paper, I ask myself, what is Islamic finance in this paper? I try to write this paper to conform so that I can get it published. And that is also creating a perverse incentive among the academician. Also, the universities put a high emphasis on SSCI ranked journal, but in the process, we are really killing the spirit of Islamic finance research. We really need to go back to the drawing board. Of course, there are internet-based journals, there are predatory journals, and they publish your paper within a week with significant publication fee, and we have to be very careful about those journals. These are some of the journals names that come to my mind. I'm sure you can add 20, 30 more on this thing. Now, there's a growing trend, and reasonably so, to discourage publishing in paid journals. Noted journals require submission fee as a referring requirement. Will not even put the paper in the review until and unless the submission fee is paid. And it's not cheap. It can go anywhere between $100 and $750. And many such journals require submission fee in each round of review. And the paper even can be rejected within a week after paying all this big money that your article is not suitable for my journal. Now I'm coming towards the end, so I need to give you some rethinking that I have in mind. These are the areas I think very underrepresented. Islamic monetary economics, very underrepresented. You do not find many research papers in this area. Theoretical mathematical models are also absent. We do not have the old good days Ibn Khaldun way of writing, political economy tradition. Social economy is also underrepresented. Circular economy just started. Islamic Fintech also just started. So these are the 10 ideas that I think is important. And if you want to pursue, there is a good potential for publication. You really need to go back to the riba, theory of riba, trying to show it from empirical, trying to show it from the conceptual mathematical way. You have to go back to Gora. These are 2 main prohibitions in Islam. Theory of uncertainty, excessive uncertainty, what it means from a mathematical sense and so on. product differences between Islamic and conventional, pricing issues of Islamic financial product, how do you price it? And if you look at even the banks, their pricing mechanism are bred with, you know, pseudo riba into their pricing mechanism. The model that they use, you know, this amortization schedule, if you look very carefully, riba is already built into their pricing mechanism. Risk of Islamic financial products, Sukuk structure, the risk and pricing, Islamic equities, impact of financial filters, religious risk of Islamic finance, determinants of profitability of Islamic financial institutions, corporate governance issues in Islamic finance. So, final thought, let me read a story from Omar ibn Abdulaziz, and you can read the entire story from Arab Gulf News, and this is my final slide. The change we desire in Islamic finance industry will only come by creating human being with knowledge of muamalat matters and can implement it. Once his wife found him weeping after prayers, she asked what had happened. He replied, I have been made the ruler over the Muslim, and I was thinking of the poor who are starving, and the sick who are destitute, and the naked who are in the distress, and the oppressed that are stricken, and the stranger that is in prison, and the venerable elder, and him that hath a large family and small means, the like of them in countries of the earth and the distant provinces. And I felt that my Lord would ask me about them on the day of resurrection, and I feared that no defense would avail me at the time, and I wept. The result was that during this short reign of 2.5 years, people had become so prosperous and contented that no one could hardly find a person who would accept alms. So I'm asking those brothers and sisters who want to pursue Islamic finance and education and also a way of life, take this as a matter of ibadah. So we will get the reward in this world by helping people and also get the reward in the hereafter. I thank you very much for listening to me and also acknowledge of all the ideas over the years I have learned from and borrowed from them and also mingled with my own ideas in this presentation. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, Prof. Kabir, for such insightful material that delivered to us. Professor Kabir already teach us on the contemporary issue in Islamic banking and finance that's been started with the statistically speaking on the number on how the economic finance growth, and also we see how the educational institution could have a pivotal effort and step to build an awareness, how important we build the awareness and the understanding on how we do a proper Islamic finance. And also he also addressed on the research issue area, on what area need to be addressed more and some other things. So thank you very much, Prof. Kabir. And let's move to our second speaker of today's webinar, Professor Hussein Abdou. He is a professor in Banking and Finance at School of Business and Lancashire, School of Business and Enterprise, School of Justice, School of Management, University of Central Lancashire, United Kingdom. His background is in banking and finance, and he got the PhD in banking and finance at the University of Plymouth Management School, Plymouth, Devon, UK, and widely published international peer-reviewed journal, resulting of more than 45 international peer-reviewed journal and article during the past 8 years. He also has a professional background in a building scoring model for banks in a number of developing countries, fintech application, business analytic, and evaluating software package for the financial industry in the US. So very good afternoon for Professor Hussein. So good afternoon, Prof.
Hello, can you hear me now?
Okay, it's perfect now.
Thank you very much.
So the platform is yours, please.
Thanks very much, Dwi. It's my pleasure to be here. Assalamu alaikum wa rahmatullahi wa barakatuh. Allahumma salli wa sallim wa barik ala nabiyyina Muhammad. Today I will focus up on Islamic Fintech. As you all know, Fintech is a growing area worldwide. And in my point of view, when it comes to technology, there is no such a difference between Fintech mainstream platforms and Islamic Fintech. But when it comes to application of technology, I think Islamic Fintechs need to make sure that all the products are Sharia compliant. So in today's presentation, I'll try to focus on addressing some main issues. What's the Islamic Fintech landscape? What are the potential opportunities here? And what are the trends or trends for 2020 or above? And how this will affect the market? And what are the key priorities as well for Islamic Fintech? So technology and automation have been a key part of the financial service market worldwide for the past few decades. We all know this. However, the emergence of the Fintech revolution has brought a disruptive shift in the financial service sector. We all know that dinar standards back in 2018 give a specific definition to the Islamic Fintech. They called it as follows: the fourth industrial revolution, driven technologies exponentially enhancing and or disrupting 20th century financial services, operation, business models, and customer engagement. So we've noticed here the difference between all definitions that we've been practicing in Fintech and this one, particularly that expression or term, fourth industrial revolution, which was coined by Klaus Schwab, the founder and executive chairman of the World Economic Forum. He said it is characterized by a fusion of technologies that is blurring the lines between the physical, digital, and biological spheres, collectively referred to as cyber-physical systems. Clearly, there is a variety of technologies, including robotics, artificial intelligence, nanotechnology, quantum computing, biotechnology, and the Internet of Things, which all are shaping this revolution. So let's have a quick look into the global fintech market, and then we'll focus up on the Islamic fintech market. As you can see, Fintech Statistics 2020, top US fintech startup segments focusing on payments and settlement, capital market, data analytics, and so on and so on. But if you look to the number of fintech startups by region, America is the leading, just below 5,800. And when you move to Europe and Middle East and Africa, just above 3,500. Asia and Pacific, just above 2,800. And top segments by fintech transactions in millions, you will find digital payments is the leading with 6.6 billion, followed by personal loans, which is 2.7 billion. The global financial sector is expected to be worth 26.5 trillion next year, with compound annual growth rate of 6%. And fintech market share across 48 fintech unicorns is worth over 187 billion as per the first half of 2019, or slightly over 1% of the global financial industry. When we talk about Islamic fintech, as per the Global Islamic Economy Report 2019, they estimated that the industry is expecting strong growth and will reach around 3.5 trillion assets by 2024. As I said before, when it comes to the application of Islamic fintech is different, and we need to make sure that they are Sharia compliant, but areas are huge, massive areas, such as risk management, prediction, customer protection, which is really important. Whoever will be able to win customers in the future will own the market. Security issues, expansion plans, banking operations, social media, analytics, and level of risk as well. Islamic fintech firms represents the next wave of growth in the Islamic industry. As you can see, 68% of Islamic fintechs are 10 or less in teams size, with only 4% having a team of larger than 100. This indicates that the sector is in the relatively early stage of maturity. However, I would say that Islamic fintechs move from being disruptors to the normal fintech mainstream to being a mature. And there is a growing number of Islamic fintechs in Europe and in the US. 26% of Islamic fintech have at least one female, so gender diversity, equality is considered as well. And the top 5 growth sectors of Islamic fintechs in 2020 are expected to be, or they are now, B2B, crowdfunding, challenger banking, blockchain and cryptocurrency, robo-advisory, and personal financial management. When we talk about the Islamic finance and fintech, clearly they are related to each other, but Islamic finance is a $0.5 trillion business. Sharia compliance finance, Islamic finance institution, Islamic banking, Islamic capital market, takaful, and other Islamic financial institutions. According to the ICD Refinitiv report in 2018, 1,447 Sharia compliant financial institutions were operating businesses in 72 countries, with Islamic finance assets expected to increase from 2.5 trillion in 2018 into a forecasted number of over 3.5 trillion in 2024. Islamic banking is still the largest Islamic finance segment, with a share of 70% of $1.7 trillion as shown in the right-hand side of my screen, followed by Sukuk, 470 billion or 18%, other financial institutions at 140 billion or 6%, Islamic funds, 108 billion or 4%, and ending with takaful, $46 billion or 2%. Moving to the geographic location, as you can see from the screen, Islamic financial assets by region, Asia, GCC, MENA are the main focus of Islamic fintech. Most Islamic finance assets resides in Asia, GCC, and MENA regions, contributing 95.5% of global Islamic finance assets back in 2017. I assume this number is much larger now. However, Islamic banking globally has low market penetrations and comprises a minority of total banking assets in most countries within the region. In Asia, for example, the 2 largest Muslim countries of Pakistan and Indonesia, as shown in the right-hand side of my screen, have Islamic banking assets of 15% and 5.8% of total banking assets respectively. And this is despite Muslims in Pakistan and Indonesia comprising 96% and 87% of total population respectively. Clearly, there are significant opportunities exist in gaining more market shares, given the right strategy here. Of course, we all know how COVID-19 has affected the development of global finance industry and particularly fintech industry. But in my point of view, it does not only provide some challenges, but there are a lot of opportunities behind COVID-19. So worldwide, COVID-19 caused a big change in our day-to-day activities. An opportunity would be the use of cashless payment. A number of countries, as you know, such as United Kingdom, Germany, Ireland, Poland, Sweden, Norway, Egypt, and some Asian countries have raised limits on the size of contactless payments. In some cases, it has more than doubled. As social distancing has taken hold worldwide as well, there has been tremendous growth in the use of digital financial services. Islamic fintechs can also expand their partnership in different ways, different strategies, by looking at opportunities with other fintechs, big techs such as Alibaba, Amazon, Google, Tencent, and non-financial services firms. The economic disruption of COVID-19 is highlighted the importance of serving individuals who are currently outside the financial system, both in developed and developing countries. There are at present, according to the World Bank statistics, 1.7 billion unbanked individuals worldwide. If you look to that chart here, 67%, 136 million adults in Middle East unbanked. If you look to the Central Asia, Eastern Europe, 49%. Statistics are huge. So there is a tremendous market here for those people. And it doesn't mean because they are unbanked that they are not served. They are served, but in a different way. But this presents opportunity to fintech or Islamic fintechs in particular to target this huge, large number of unbanked populations worldwide. Growth of digital payment is going cashless. As per the World Health Organization advice, they expected that over 45% of individuals have changed the way they bank during the crisis in the US. And there has been a 20% increase in digital engagement in Europe. This, which can enhance customer experience, definitely. This presents massive opportunities to Islamic B2Bs. If you look at that figure here, it's a 2020 funding hits new records despite the pandemic, US deals and dollars. If you look to the lower part, there to the investments, new record, 130 billion US dollar in 2020. And if you look to the number of deals, second highest in the history. So regardless the COVID-19 pandemic or hit, there are a lot of opportunities here. If you look at the challenges, we all know the challenges. We all know that due to COVID-19, there are numerous players which will be forced to shut down due to lack of capital, and consequently number of fintech startups may decrease. There is also a notable decline in the income across different types of businesses, which may increase default rates. According to recent reports as well, around 54% of borrowers will loan only after the lockdown restrictions are eased. In Europe, during March and April 2020, B2B lending dropped to 1/3 of the cumulative volume of previous months and forced several platforms to collapse. There is clear decline in the financial industry performance due to COVID-19. According to Bloomberg recent reports as well, the average cost to income ratio at the top European banks amounted to 67% in 2019, the highest rate since 2008. Return on equity fell to the lowest level in 3 years at 8.7%. As consequences of COVID-19, limited access to funds, lower incomes, workforce reductions, and job losses, financial uncertainty decreased the number and size of bank deposits and purpose loans, such as mortgages, car loans, home improvement, holiday loans, and others. For example, it has been predicted the decline in revenues of the European and American banks in 2020 would amount to 8.5%. So when you look to the Islamic fintech overview worldwide, in Dinar standards back in 2018, they published a really nice report around Islamic fintech. You can tell that regardless all the different types of services that Islamic fintech can provide, from deposit, trade finance, treasury, wealth management, and so on, so they are linked to mainly 9 fintech technologies distributed between back office, middle office, and front office, as shown in this figure, which we are going to talk about shortly. However, the global Muslim population has an average age of 24 years, with a higher growth rate than any other religion worldwide, and is expected to comprise 26.4% of the world's population by 2030. According to their report back in 2018, there were around 93 Islamic fintech companies, predominantly in financing services, followed by wealth management and funding, as shown here. B2B finance is provided by 65 companies, followed by distributed ledger tech with 14 companies. It is not surprising at all that B2B platforms are the most common Islamic fintech platforms, given that it captures the essence of Islamic finance as it directly connects the capital providers with the users of capital using the power of technology. When we're moving to the classification geographically, Indonesia is leading with the most companies offering Islamic fintech, 31 companies, followed by US, UAE, UK, and Malaysia. 2 of the top 5 jurisdictions of Islamic fintech are not major jurisdictions for Islamic finance, implying that prophecy of fintech's development requires a sound technological base compared by the culture of innovation, rather than dedicating expertise in Islamic finance. So Islamic fintech growth is being driven by increasing government and regulatory support, younger technology-minded customers, innovation attractiveness, and the availability of startup incubators and accelerators that are often state-sponsored. And if you look to the numbers here in this figure, this is just a summary of what I have just said to you over the screen. However, as per another report in Islamic Fintechs, July 2020, a global network representing Fintech's Islamic segments, it says that it has been recorded that there is 142 Islamic Fintechs around the world. And UK is now home of a growing 27 Islamic Fintechs, ahead of Malaysia, Indonesia, and the United Arab Emirates. Malaysia has 19 fintech startups, followed by UAE with 15, Indonesia with 13, and Saudi Arabia and the US with 9. I'm sure these numbers will continue to change year after year or month after month, given the growing sphere of the Islamic fintechs. However, governments are realizing the potential benefits of Islamic fintech and actively supporting its development. Countries are building centers for startups to interact and collaborate, providing early stage funds and connecting fintech companies with investors, all within a hospitable regulatory and policy environment. As an example here, $100 million planned fund by the Dubai International Financial Sector to invest in fintech startups. Bahrain and Malaysia as well, they have their own regulatory sandbox for fintech growth. If we look to the potential opportunities, this figure here identified a number of gaps and opportunities in relation to fintech or Islamic fintech in particular. Giving the big data, artificial intelligence, quantum computing, which is the back office, B2B finance, open banking, mobility, which is the middle office, and blockchain, cloud, and cybersecurity, which is the front office. If we focus on the area which we call here A, the role of analytics and big data in Islamic banking. Clearly, artificial intelligence and big data have played crucial role in disrupting the global banking system. No one can deny this. From identifying and engaging customers to reducing operating costs through deploying machine learning capabilities, neural networks, genetic algorithms, these non-parametric techniques, artificial intelligence based where they can make change. Islamic finance institutions have sought to incorporate artificial intelligence and big data into their operation. A very good example here would be May Bank, which has a group finance office that employ analytics, and Emirates Islamic using HR Banda, which is an AI artificial intelligence program that could automate around 50% of the bank recruitment processes. Moving to area B, which is trade finance or Islamic trade finance and the use of blockchain. Global trade finance is around 12.3 trillion industry back in 2016. I'm sure that number is much bigger now, representing 75% of the global trade. Despite substantial potential, the Islamic trade finance industry was estimated at only $186 billion back in 2016, with substantial room for growth. It is clear that Islamic trade finance is a crucial priority now for Islamic fintechs. Blockchain use in trade finance, where there is a need for substantial documentation and independent verification, all of which can be simplified through smart contract, has been strongly validated. For example, HSBC back in 2018 issued a letter of credit to US food and agriculture firm Gargill via a smart contract. Area of gap and opportunity we call C, which refers to the relation between wealth management and artificial intelligence.
My apologies, Professor. I'm sorry, you have 4 minutes left. Thank you.
Thank you. Wahid Invest presents a good example as the company raised $12 million in the UK. Area D for takaful and retakaful. There is a lot for takaful industry to do here, with 80 startups identified globally as substantial disruptors to the conventional trillion-dollar insurance industry worldwide. B2B is another growing area and substantial focus date for Islamic fintech. Other areas would include as well what has been stated in the World Bank Group report, leapfrog jumping financial services reach and impact, address significant financial inclusion gaps with core markets, and deliver Islamic social financing support to the global SDGs and needs. When we talk about the most recent trends, and as I said before, if you are talking about fintech, so there is no such difference in my point of view between fintech and Islamic fintechs when it comes to technology. A lot of new trends now in the market, as their Gemini report, which they offer financial service analysis reports, they identified 3 main areas, which is artificial intelligence solutions, deep customer insights, and data-driven compliance as the new trends. All these new trends on the screen are talking about artificial intelligence and the implementation of artificial intelligence into the fintech industry. Moving to the risks or expected risks that we may face in fintech industry, convenience in borrowing could lead to being trapped in debt. Mobile Sharia compliant B2B financing enables financial inclusions by accessing unbanked population regardless of the reasons that had caused the customer's absence. Another area for B2B finance offer convenience where credit approval can be granted within minutes based upon personal data and telephone numbers. Lack of financial infrastructure is another area. Artificial intelligence could lead also customers to acquire products or services they do not need due to the lack of understanding and knowledge around technology. Strict fintech regulations, as governments would start to call for more restrictions and regulations as the fintech industry is growing. And cybersecurity, of course, is another area. But if you look to the mitigation now, or areas of mitigation, access to necessary talent. We must, as Islamic fintech, have access to necessary, talented, educated people and make sure that they are Sharia compliant. Providing easy credit, which is another thing. Islamic Microfinance Cooperative, BMT, in Indonesia, for example, will only provide financing to genuine micro and small businesses. Robust risk management policies is required. And there is another last point here, which is key stakeholders of Islamic finance, Islamic fintech, including regulator, incumbents, and the challengers must work with Sharia scholars to align their vision and knowledge around technology. So my main takeaway points for today: fintech industry will continue to thrive. My own expectation would be around 30 to 40% growth. Next few years will witness massive shift towards even more digital world, cashless society. And the Islamic fintech industry will witness more ways of payments. Access to the necessary talent and skills is a must. Cybersecurity will be one of the top risks facing all fintech and financial institutions. More attention should be paid to big data analytics and business analytics. Blockchain and cryptocurrencies will shake things up around the world. And we need to think human and machine, as automation is not about replacement of humans, but it's working together. And I can tell at the end that digital currency is also on the horizon. And I will keep it at this distance short. Thank you very much for listening.
Thank you very much, Prof. Hussein, for enlightening material on the Islamic fintech globally. And I'm pretty sure that the participant has a lot of questions on it. So do not forget that you, all of the participants, you have a opportunity to ask to the Professor Hussein along with the other speakers by put your question in the chat box, and I will try to bring up the question right after the end of the speaker of the last speaker. So let's proceed to the third speaker. He is the Director of Islamic Financial Service at National Islamic Finance Committee Indonesia. Prior, he also as a Director of Law and Promotion and Public Relation, also in the National Islamic Finance Committee at 2019 to 20. He got the Doctor of Business Management from University of Pajajaran and has some teaching experience in some Indonesian universities. So I bring up to you Dr. Taufik Hidayat. Selamat malam Pak Taufik. Good evening Pak Taufik.
Good evening. Well, thank you very much, Ms. Dewanti. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Please Pak, time is yours.
Bismillahirrahmanirrahim. Rabbi shrahli sadri wa yassir amri wahlul 'uqdatam min lisani yafqahu qawli. As has been mentioned by the previous speakers, Islamic finance has been growing rapidly and recognized as having numerous potential worldwide. Many countries have been putting some efforts in the development of Islamic finance, locally or globally, to seize their opportunity. It is also important to note that developing Islamic finance, some adjustment needed, such as regulation, human resource, education, as well as literature. And in order to allow a sportive environment that's enable Islamic finance improve significantly and maintaining identity or market area. Let me start with the overview of Indonesian Islamic economy. Next, please. As has been mentioned by Prof. Kabir, that based on the State of Global Islamic Economic Report 2020-2021, Indonesia is ranked fourth and in improvement from the previous 7 and 5 rank in the last year. And according to the Global Islamic Finance Report, or GIFR, and also Islamic Finance Development Indicator, IFD, Indonesia is ranked the second in last year. Next, please. How about the high-level initiatives to optimize the potential of Islamic economy and finance? From the global perspective, Islamic economy and finance industry offers numerous potential with a worldwide market of 1.9 billion of Muslim population and around 2.02 trillion US dollar of consuming spending. And global Islamic finance assets amounted of 2.9 trillion US dollar, while in the global foreign direct investment of our FDI stood at 11.8 billion US dollar, with above 90% are concentrated on halal food and Islamic finance. These immense global figures are amplified by the national potential in which there is a need of financing in infrastructure sector for approximately 458 billion US dollar from 2020 up to 2024. Supported by a positive macroeconomic view as predicted that in this year economic growth will be in the range of 4.5% up to 5%. In May last year, Indonesia has launched a master plan for Indonesia Islamic economy by the President Jokowi, which became the roadmap and guidance in the development of Islamic economy and finance. This MAXI is derived through implementation plan of Indonesia Islamic economic development as a technical reference for the stakeholders. And in February last year, INKS widened its function scope to include not only Islamic finance, but also Islamic economy, and transformed into the National Committee for Islamic Economy and Finance, or KNEKS. Next, please. How about the task and function of KNEKS? Based on the presidential regulation, the KNEKS main function is to accelerate, expand, and advance the development of Islamic economy as well as finance in order to strengthen national economic resilience. And the scope of Islamic economy and finance within the KNEKS includes development of halal industry, Islamic finance industry, Islamic social funds, and Islamic business activities. Besides the development of Islamic infrastructure, such as human resource, legal, etc., are also given appropriate attention. KNKS provides recommendation, coordinates, synchronize, supervise, as well as evaluates the implementation of policy direction and also strategic programs in the Islamic economy and financial sectors. Next, please. How about the Islamic financial services development strategies? Focus of Islamic financial services development for 2020-2024 are the first one is enhancement of capacity, governance, and infrastructure of Islamic finance industry, and the second one is strengthening the capital and also funding of Islamic economy and finance industry. There are at least 8 working program as intermediate targets. Include the first one is promoting the establishment of National Halal Fund. The second one is providing Islamic social security services, and the third one is the implementing kanun or regional regulation of Islamic financial institution in Aceh province, and the fourth one is implementing Islamic public-private partnership for infrastructure development, and the fifth is promoting an establishment of Islamic investment bank, and the sixth is coordinating Islamic banking consolidation, and the seventh strengthening Islamic insurance or takaful industry, and also developing Islamic pension fund. Next, please. How about the landscape of Islamic financial industry in Indonesia? Before the market share of Indonesia Islamic finance industry as December of 2020 is 9.9%, amounted 1,800 trillion rupiah, or equivalent of 127 billion US dollar, with 22.8 of growth year on year. The assets include Islamic capital market amounted 1,077 trillion, or equivalent of 76 billion US dollar, and Islamic banking amounted of 600 trillion, or equivalent of 43 billion US dollar, and Islamic non-bank financial institution amounted 116 trillion, or equivalent of 8.25 billion US dollar. Top contribution in Islamic financial services are foreign sukuk, sovereign sukuk, Islamic banking, Islamic mutual funds, Islamic shares market capitalization, which is excluded from the total asset amounted of 3,344, or around 237 billion US dollar. Islamic financial literacy and inclusion in this are at 8.9% and 9.1% respectively, significantly lower than the national financial literacy and inclusion indices, which are at 38.0% and 76.2% respectively. Next, please. Important events of Indonesia Islamic banking industry in 2020. The year of 2020 has been marked by signing of conditional merge MOU by 3 major Islamic banks in Indonesia, namely Bank Syariah Mandiri, Bank BNI Syariah, BNI Syariah, and Bank BRI Syariah, which are the direct subsidiary of 3 state-owned banks. The merger has resulted in the establishment of the largest Islamic bank in Indonesia, and currently known as Bank Syariah Indonesia, which also included in the top 10 national bank based on asset. With total asset of around 114 trillion and capital of 20.4 trillion rupiah, Bank Syariah Indonesia is hoped to be the anchor of development for Islamic economic ecosystem and to pave its way to become one of the top 10 Islamic bank globally. The second event worth our attention is the progress of Kanun Aceh, Kanun number 11/2011 implementation. The Kanun itself regulates all financial institutions operating in Aceh to be Sharia compliant. In that order, the conventional banks have to be committed to convert each asset, which also supporting the growth of Islamic banking in the region. Based on the Islamic Banking Act number 21, 2008, all current conventional banks are obligated to spin off their Islamic window before the middle of 2023. However, the industry commission and the regulator are now evaluating spin-off policy. OJK Chief Executive of Banking Supervision has already made a statement that a spin-off should not longer be mandatory. Next, please. How about the landscape of Indonesia Islamic non-bank financial institution? Landscape of Islamic non-bank financial institution as of December 2020. The first one is the total asset of Islamic non-bank financial institution amounted of 116 trillion or equivalent of 8.25 billion US dollar. The market share itself is still very low, around 6.5%, with 11 of growth year on year. The assets of contribution of Islamic non-bank financial institution. The first one is Islamic Insurance Company, for amounted 38%. Other Islamic financial institutions around 35%, and Islamic multi-finance around 16.8%, and Islamic pension fund around 6.9%, and also Islamic Fintech, as already mentioned by the previous speaker. Now, in Islamic insurance and Islamic multi-finance industry are also have to larger extent than the Islamic non-bank financial institution. Next, please. How about the Islamic non-financial institution milestone during the last year? KNKS encouraged several programs to support Islamic economic and financial market economy through the role of Islamic non-bank financial institution. There are top Islamic non-bank financial institution milestone during last year. The first one is conversion of Tanah Pensiun University of Muhammadiyah Surakarta in August 2020 and joint commitment of stakeholder to develop Islamic scheme of employment social security, and 50% of Islamic fintech portfolio increased higher than financing through banking industry. Another information is right now Indonesia has at least 4 Sharia pension fund in Indonesia during the two years development. Next, please. How about the Islamic capital market development? Yes, the interesting one. The global Islamic capital market that is portrayed by the global sukuk market continues to grow, especially foreign denominated sukuk by the shocklist trends in the global market. Meanwhile, Indonesia's capital market continues to grow regardless of uncertainties. First, the number of investors in Indonesia increased. The second one is there are several remarkable issuance for the Islamic capital market products in 2020, namely cash wakaf, link sukuk, and retail credit sukuk, as well as global sovereign sukuk. CWLS Remark as the first issuance in the world which combines wakaf scheme and sukuk. Then the retail green sukuk recorded as the biggest amount of saving sukuk subscription to date, up to 5.4 trillion rupiah. Lastly, the global sovereign sukuk was oversubscribed around 6.7 times, with the order book recorded 16.6 billion. And last two slides, there are the roadmap of development of finance during 2020 and during 2025. On February, OJK already launched the Indonesia Islamic Banking Roadmap for 2020-2025 as part of OJK's strategic initiative on financial services master plan. And the second one is the Indonesia Islamic Capital Market Roadmap for 2020-2024. The potential, next please. Next. The potential areas for Indonesia's Islamic finance development in this year. The first one is omnibus law for financial services. The development of Islamic financial industry could be strengthened through the omnibus law, which focuses on development and strengthening the financial sector. The second one is Islamic financial inclusion. Several strategic initiatives such as Islamic financial product, innovation, Aceh Kanuns, and Islamic scheme of employment social insurance could increase Islamic financial inclusion. And the last one, the multiplier effect from a merger of Islamic bank integration with PSA would push the growth of potential of Islamic banking and product innovation, also takaful industries, general takaful, family takaful, takaful, and etc. Thank you very much, Iriyanti.
Thank you very much, Dr. Taufik. It's such an interesting information on you explaining the role of the KNEKS itself, and to see the statistically speaking on the Islamic banking and finance, also the non-bank Islamic finance sector in Indonesia. So thank you very much. So let's proceed to the fourth speakers for today. I'm very happy to announce her because she is currently now the Director of Islamic Financing at the Directorate General on Budget, Financing and Risk Management, Ministry of Finance of Republic Indonesia. She earned the Master of Art in Economics from the the University of Delaware, USA, and experience in the field of Indonesian capital market regulation and law. She was also directly involved in developing Sukuk Negara since the very beginning. So without further ado, let's meet Mrs. Dwi Iriyanti Hadiningdyah, MA. So good evening, Ibu. Thank you very much for joining with us.
Okay, thank
So
you,
please, Ibu.
thank you, Ms. Dewanti, for a nice introduction. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, and good evening to all of you. I'm here from Jakarta. It's already night now. Hopefully, I will be able to explain what about experience that we have. So here I just want to tell you share about experience what we have done in developing Sukuk Negara and how its role in supporting financial market. Sukuk Negara is Islamic bond issued by the government of Indonesia. And here I would like to show you the whole picture of key roles that has been taken by Sukuk Negara since 2008. First, showing you about the role of Sukuk Negara in supporting Islamic financial market both globally and domestically. And second, showing you how Sukuk Negara can follow the robust of technology through digital finance and fintech. And the third, we would like to show you about Sukuk Negara in supporting financial inclusions. And the fourth, I would like to tell you about or introduce you about impact and social investing through Sukuk Negara. And I would like to start with a milestone of Sukuk Negara. Here, I would like to divide it into 3 periods of time in developing Sukuk Negara. First period in 2008 to 2012. You know that when we developed Sukuk Negara, we supported by strong legal basis through Sukuk Law number 19 year 2008. This is, I guess, the only Sukuk law that specific dedicated to Sukuk, because you know Indonesia follow the civil law regime, so everything should be all the regulation should be placed in law or regulation. And in this period, you see many debut that we have done. First issuance in domestic market in August 2008, and followed by retail Sukuk in 2009, and follow global Sukuk in April 2009 as well, and Sukuk Hajj Fund in 2009. And first auction also we introduced in the end of the 2009, and Islamic T-bills and auction project-based Sukuk we introduced in 2012. And then second period, you see here we also have project financing Sukuk. This is project finance Sukuk. It means that the proceeds of Sukuk dedicated to finance earmark project. Of course, this is government project. And also in this period, we issue the saving Sukuk, non-tradable Sukuk that offer to individual investor. And also dual transit global Sukuk we introduced, because for the first period we only issue only one transit, which is 5 years. But in this period we issue two dual transits, 5 and 10. And last year in 2020 we already introduced 30 years tenor for Sukuk, so we have 3 transits during issuance. And in third period 2018 to 2020, this is our debut suku for green suku. Green suku is the first green suku in the world, and this is very important landmarks that we made, because when we issue green suku, then we encourage investor from Western investor start to aiming to see deepen about suku structuring, and then from Middle East investor start want to know more about green format of green bond and green suku. Also in 2018, we start to introduce online saving and retail suku, and also in 2019, we issue green retail suku. Why we issue green retail suku? Because we would like to give higher awareness to individual, especially millennial investor, because we know that millennial investor have like green lifestyle. So we introduce them about impact investing here. So we combine and we see about the trend of green lifestyle. Then we know that millennial also start to invest. And then we combine that scheme to introduce how we can respond, give responsibility to our environment through investment. Next slide, please. Here, overview about suku negara. Since 2008, we already issue more than 1,600 trillion IDR with outstanding more than 1,000 trillion. And we issue into denominations, currency, IDR, and USD. Issued method, we have three method auction that we have do since 2009, but now we issue twice a month, and then private placement, of course, depend on the interest of investor. When they want to get the specific tenor and specific series, they will come to us through private placement. And for book building, we do for retail and for global suku. Our type investor, actually for domestic, we have institution and also individual, but for global investor, mostly is institutions. But by regions, we can see from Middle East, about 25%, and Europe and 11%, US 21%, and Asia, including Indonesia, is about 44%. And in terms of suku structure, we already have 4 structure. All of them based, 3 of them based on Ijaro sale and leaseback. It means the whole underlying consists of tangible asset. And the second, Ijaro al-Khadamat, that one is for hedge fund suku. The underlying asset is consists of services. And Ijaro asset to be leased, combine underlying between tangible asset and project. And for Wakalah, also combining between project and set-owned asset. We call it tangible asset here. And we see from the graph here, actually, during pandemic period, 2020, we see that our issuance increased a lot. It's about 109 trillion IDR. It means that our suku negara can support budget financing in that any conditions, because we have a lot of project, we have a lot of underlying consists of state-owned asset, and also we already prepare about structure of Sharia structure here. Next, please. Yeah, I would like to show you where Indonesia in the global market here. Indonesia is the leading global sovereign sukuk issuer. Actually, in the last 5 years, with total issuance of 20.65 billion IDR, and Indonesia contribute about 22.18 US dollars. So Indonesia sukuk always with investor always wait of our sukuk. Of course, this year we would like to issue the next sukuk with green format as well. And now we just preparing. Hopefully we can issue in this semester. Next, please. We would like to show you about digital finance and fintech. And actually our instrument sukuk negara can follow the robust of technology. Next, please. We start to use digital format by auction. We use auction method using digital since 2009, and then developing the online platform for retail sukuk in 2018. That one is very challenging for the first time, but we see the result during pandemic. It's helped a lot because all investor, all individual can invest in our instrument by their own mobile phone, and everything can be settled by online system. And in 2019, this is the first green retail sukuk. Also, we offer through online platform in domestic market. And in 2020, this is our first experience. Of course, during pandemic, we will not be able to do roadshow or give investor update by visiting them in their country, but we can do them everything with virtual roadshow, including the execution. And we see from the slide from Pak Taufik that we got the order about 6.7 times oversubscribed. And this year, by virtual roadshow also, we introduced the longest tenor ever for sukuk, which is 30 years tenor, and the result is very, very amazing for us because everything done by virtual. Next slide, please. Here we would like to show you how sukuk negara support financial inclusions. Next. We issue retail sukuk since 2009 with two types, two series. Sukuk retail, that one is seri for tradable, and sukuk tabungan or invest saving sukuk, that one is for non-tradable sukuk. We issue 13 series for sukuk retail, tradable sukuk, and 7 series for non-tradable sukuk. And you know the result is we got investor is very huge investor here. You see, for total investor for retail sukuk with both series is about more than 400,000, and then the with nominal about 226 trillion IDR. And we can see here investor come from various generations, and really happy for us when we found the generation Y generation. It means a millennial generation, and Z generations. You can see here about 36.59%. It means that the young generation now they start to invest. So we know that the generations very close with the mobile phone, then it's good for us then when we introduce platform online, so it's become easier for them to invest in our instrument. Next, please. And actually for retail suko, we issue the nominal size is about 1 million IDR. The first issuance in 2009, the minimum nominal for suko is in 5 million, but we decrease with nominal in order to support for financial inclusions. And that's the fact, the result for the decreasing the nominal, we can get more millennial investor and more investor coming. So I think we success in support financial inclusions. Next, please. Impact and social investing. Yeah, we do a lot of innovation here. Next, please. What we have done for suko actually not only to get finance for our budget financing but we try to do more. So the proceeds of suko we dedicated to finance for project financing suko. We can see maybe the next slide. Since 2013, actually, we already financed about 3,447 projects that already financed through suko. We have road and bridge here, about 491 projects. Also, we finance for water resources, also transportations. We also financed for and support for educations. We built a university building, and also for religious, we increase our here about 84.7 trillion to support religious building here, about Hajj dormitory here. And then for projects, national park, also we support them. And also for laboratory to support for research here. That one that we call impact investing. How about social investing? Social instrument, we start to issue what we call cash wakaf link suko. Cash wakaf link suko we issue through two methods. First is through private placement, and then second through book building. We call it cash wakaf link suko retail. For this, the first issuance in March 2020, the size is about 50 billion US IDR. And here, why we call social series or social impact instrument, because for investor that they usually got benefit from the investment here, but they didn't get the result or the benefit, but the benefit will go to Nazir here. So investor will act as a wakif, but here we introduce wakaf temporary about 2 years, but for private placement is about 5 years. Temporary depend on the tenor of suko. And the impact here for the result of what we call a coupon, used to support for renovation building of medical and procurement for medical equipment for Wakaf hospital. And for coupon, we use for free cataract surgery for about 2,500 duafa patient. And then also to support ambulance procurement. And the next for cash wakaf link suku retail, why we issue cash wakaf link suku retail here? Actually, we try to support and to facilitate the wakif to be easier to do wakaf. So by use just wakaf about 1 million IDR, they can do wakaf, and that one is temporary, only 2 years. So people can do can help others through wakaf temporary, only 2 years, and that one is very safe because the government guarantee to pay back after 2 years, and the coupon also will managed by Nazir. Here we have a Nazir, and Nazir appointed by a bank that act as selling agent here. So the Nazir will receive the coupon, and then will distribute the coupon to duafa and to social projects that already list down before we issue the project, the suku itself. So the obligation of Nazir not only distribute the coupon, but also the Nazir has obligation to give a report to the Wakif as well as to the government. Next, please.
I do apologize, Ibu. You still have 3
Yeah,
minutes.
one more
Okay.
slide. That one is the last slide from me about green suku. That one is also called impact investing, because the all proceed, 100% of proceed should be utilized to finance the green project. As we know that a green project is part of government commitment to combat climate change. So by issuing green suku more and more, it means that we can finance the green projects more and give more benefit to the society, to people, to get the better life. So I think that one is the end of my presentations. I will be happy to take any question, if any. And I think hopefully will bring benefit to this society and all participants here about my sharing. And I hand over back to Ibu Dewanti. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much for Mrs. Dwi Iriyanti for such comprehensively explaining on the sukuk negara in Indonesian context for sure. And I'm pretty sure it's very interesting because Ibu also mentioned that nowadays the young generation attracted by the usage of technology. So hopefully this kind of scheme may also help to improve and elevate the Islamic finance industry in Indonesia. So ladies and gentlemen, the two last speakers already talked about the Indonesian context. So let me introduce to you Professor Mansoor and Ibrahim, the Dean of Graduate Studies, International Center for Education, Islamic Finance, Malaysia. He received his PhD in economics from the Washington University in St. Louis. He teaches mostly quantitative courses such as mathematics for economics and business, statistics and econometrics, and both for undergraduate and postgraduate levels. And his area of interest are monetary economics and time series analysis of macroeconomic and financial data. So, Prof. Mansoor, good evening.
Yeah.
Thank you very much for being with us. So please, platform is yours.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. I think good day, good morning to those in US and good afternoons as well as basically good evening for those who are in Malaysia as well as in Indonesia. Right? And thanks for Sebelah Maret University for inviting me to participate in this webinar sessions. And I think it's a good opportunity for me, particularly to listen to basically so many exciting that are happening right now in Indonesia in the context like finance, and to listen to the explanations regarding fintechs, and also the explanations or the presentation by Prof. Kabir, very comprehensive in terms of touching, I think, almost every issues that we need to look at in the context of Islamic banking and finance. And also he go on and emphasize the importance of research as well as the importance of publications, right? And I would try to be brief, knowing the fact that we still have 5 more speakers after me, and so I try to put within 15 minutes in terms of my presentations. And I think I would like to pick up only one aspect or one issue that has basically has been touched by Prof. Kabir Hassan. Only one aspect I think would be sufficient for me to give. I don't think that the full justice to this topic, but then some justice to cover certain aspects, right? And if we look back, if we dated back the modern Islamic financial systems to 1960s, it means that more than 50 years, Islamic finance has been in existence. And the emergence of Islamic finance basically come with the promise that it has made. And the promise is not only to free Muslims from
my apologies, Professor. I'm sorry. Would you please to put your slideshow into the slideshow mode?
Okay. For sure.
Yes. Thank you very much. Perfect.
Now, I think the Islamic finance come with a promise, and the promise not only to free Muslims from the exploitations of interest-based system, but also to promote justice, right? and to promote fairness. Right? And to bring us basically close to basically the creator, right? So that the promise of Islamic finance. And when it comes to fairness, justice, and everyone should not be left behind once it comes to financings. And one specific topic or specific issue that I think that we should look at is basically inclusive growth, right? So the questions that we might want to ask, right? After 50 years or more than 50 years of existence, right? Has we achieved, for example, have we achieved the inclusive growth promise of Islamic finance? So that would be my focus. So it's very specific, right? So just pick up one. And these are the area that I am quite interested in when it comes to inclusive growth. Not only this is basically the important key area that Islamic finance need to look into, but then the awareness worldwide since 2015 with the inceptions of the United Nations Sustainable Development Goals, and the emphasis that I think globally that we have on ESG engagements by financial institutions as well as non-financial institutions. So what I try to look at into in my presentation with short 4 slides and try to bring back, right, what it means by Islamic financial systems. And I think this one is very important to understand the role of Islamic finance, because so far, if we look at even the research that has been brought up by or have been highlighted by Prof. Kabir Hassan, predominantly we focus on Islamic banking and capital market to the extent that we believe that the Islamic financial system comprises mainly of Islamic banking and Islamic capital market. Right? So I would like to give a little bit of the introductions of Islamic financial systems, and then try to look at Islamic finance promises in terms of from basically try to be put a little bit on the academic viewpoints in terms of the mechanisms on how Islamic finance theoretically can promote inclusive growth, right? And then I will move into what do we know so far with respect to the contributions of Islamic finance to inclusive growth. So I will try to look at the studies that has been done so far in terms of Islamic finance and economic growth, and Islamic finance and income distributions, and Islamic finance and the environments. So it's basically, if you look from here, I kind of roughly define inclusive growth that the growth, the progress that emphasize the material well-beings, the equal share of incomes, right? As well as that emphasize the importance of the environments. So it's basically putting together the profit and people and the planets. And then I will try to emphasize one or two challenges. I think that one would be the agenda of my presentations with respect to these very specific issues that I believe that at the moment we need to look at, right? And more importantly, in the context of the research that we need to do, I think we need to do more, right? In the context of making Islamic finance to really achieve whatever the intended objectives like finance in accordance to the Maqasid al-Sharia, right? So now when it comes to Islamic financial system, is basically, when we say these systems, it have components, right? And those components are institutions and markets, and basically when it comes to financings, right, or when it comes to finance itself, it involves the provisions of financial funds, right? Whether that provisions come in the form of business, right, or come in the form of transfer of benefits or of funds from one entities to the other entities, and these are done in accordance to the Sharia. And I do not need to go into basically the principles of Islamic finance, because I believe that all of us are aware of the principles as have been mentioned at the beginning of the presentation by Prof. Kabir, with respect to prohibition of riba, the avoidance of uncertainty or extreme uncertainty, profit and loss sharings, mutual assistance, and then unlawful activities, right? For forbidding unlawful activities. Now, if we look at as a system, for example, for a system to work, every part of the system must work together, right? And that's why sometimes when we look at, so many people are so frustrated with Islamic finance, because they look only one portions, mainly, for example, banking, or some look at capital market, and they try to basically, and they come up with the opinion that Islamic finance doesn't achieve the maqasid. And obviously, when you look at one part, right, every part have its own functions. And for me, in my opinion, we should not expect, for example, business financial institutions, the banking, for example, or the capital market, or to a certain extent, the takaful institution, for example, to play huge roles in the context of social financing, right? But then the business financial institution must interface with the social finance institutions in the context of transference of funds to those who are in needs, right? And that is non-business activities. So basically, we need zakat institutions, awqaf institutions, and the whole system must put together in one integrated systems. And if we look at the Islamic finance as a system, for example, with each components play its own part, I think we can see more clearly in the context of the achievements of the maqasid al-Sharia, right? But if we look separately, right, we may become frustrated, right? Because of the fact that banking may not be able to do much when it comes to basically the social financings or social corporate or corporate social responsibilities and so on. They have done, but then it may not be to the extent that we would like them to be, right? Because that role should be played by social finance institutions. Now, in this complete forms, right, I would say that Islamic finance from the principles basis, based on its principles and from theoretical points of view have a major roles in terms of promoting inclusive growth, right? And there are mechanisms that we can take a look at. And when you look at various discussion that has been made in terms of the benefits that Islamic finance can bring, I can divide the mechanisms into various type of channels through which Islamic finance can promote inclusive growth. And I divide them in terms of the growth channels and the promotions of fairness and the basic legal maxims of, or Islamic legal maxims is basically mitigations of harms or even avoidance of harms, right? Now, a lot of work has been done in the context of growth channels, right? And basically the presenter have mentioned in terms, even in terms of sukuks, right? In terms of retail sukuk, try to promote financial inclusions. And in fact, if you look at various articles or policy work coming up from the IMF or World Bank, provide a good ground that Islamic finance can promote financial inclusions, right? Which means that bring those people who are unbanked before and come to the formal financial institutions, and that have the benefit in the context of relaxations of financial constraints, mitigations of, for examples, of financial accelerator effect and so on. And in the context of growth channels also, Islamic finance can promote efficiency. Now, efficiency here, I do not mean that you try to get the optimal benefits or you can try to get the maximum profits for the given resources, or for the given profit level or revenue, you use the least resources. I'm more financial efficiency in the context of Islamic finance basically integrate harmoniously the real and the financial sector. So we have what we term as real and finance connectivity. It's unlike the conventional financial systems where the financial system can stand on its own, right, without the need of the real sector, through the debt instruments and through the mechanism of interest rates, right? And Islamic finance also can promote financial stability. And a lot of work has been done on this, while there may be some conflicting evidence so far, but then I would say more or less many work have promoted or have supported the fact that Islamic finance can inject financial stability into the system, right? Stability into the system. So those are basically the mechanisms that make Islamic finance to be able to promote growth, right? And my reasons why I emphasize on growth, because to have inclusive growth, a nation must grow first, right? If you are stagnant, very difficult to achieve inclusive growth. And Islamic finance can play a big role in context of promoting growth, right? And in context of sharing the incomes, right, embedded in Islamic finance in terms of the principle of mutual assistance and the social responsibility, and also rewards come with efforts, right? So those are the principles embedded in Islamic finance. And as I mentioned, we have basically mitigations of harms or avoidance of harms, preventions of financial exploitations, and that's why interest rates must be screened out totally from the system for us to have a fully, truly Islamic financial systems. And theoretically, by having basically low leverage, for examples, right? Low debt, because to some, for examples, there's no debt in Islamic finance. The only debt in Islamic finance is called the Hassan, right? So there should not be any debt instruments. And without that, then it can mitigate in terms of financial accelerator effect. And that will stabilize the system in the face of shocks that may affect the balance sheet of the firms or balance sheet of the banks, right? And also prevention of harms, which are very important in context of the environments. So those are the mechanisms. When I look through, a lot of work that has been done. And of course, I benefit a lot from the survey work that has been done. I think a lot of work, I have one survey article that I have written, and I think Prof. Kabir have 2 or 3 or even more in terms of publishing work in the area of Islamic banking and finance, the survey work that has been done. So these are the mechanisms that Islamic finance can bring, right? Now, these are the theoretical promises of Islamic finance, right? But then what are the evidence? What happened in reality, for examples, right? Now, I have to say that in general, in reality, that Islamic finance have not contributed to its full potential yet because of many different issues, many different challenges. A lot of them has been raised before for Islamic finance to contribute to inclusive growth. But there are some promising findings that has been made by many different authors, especially in the context of Islamic finance promoting economic developments as well as fairness in terms of the distributions of income. Now, when we look at the empirical evidence of what people have done, a lot of work or more work has been done relatively on how Islamic finance can promote the material well-being, right? Either using, for example, individual country study. I think some study has been done for Indonesia, some study has been done for Malaysia, and some for Qatar, for Bahrain, and so on, and also some studies that had come up in, I think, very good journal, employing cross-country data. And they come up with the evidence, basically, that Islamic finance does promote growth. But then there's no clear evidence that Islamic finance is better than conventional finance, right? So both Islamic finance and conventional finance promote growth, but we have no evidence yet to say that Islamic finance promote growth, but it promote better than conventional finance. So that's so far what we know regarding the promotion of growth. What we would like to see, of course, Islamic finance to be a better engines for stimulating growth, uplifting basically the material well-beings, right? Or the standard of livings of Muslims, right? And when it comes to income distributions, I would say there are less number of studies that has been done, and mostly based on case studies and on social finance institutions. I think various case studies come out from Indonesia, for example, that look at regional contributions of microfinance and how it resolve or it mitigate the problem of poverty. So some say it's been done in that context. But in terms of worldwide samples, less has been done. But the studies that has been done at basically social finance institution level, these findings seem to be promising. Right? And then on the environments, for example, studies on this aspect are virtually basically very difficult to get, very difficult to find, right? But then there are attempts that has been made in order to incorporate the environments within the Islamic financial system, for example, through value-based intimidations, right? Or in terms of investment, for example, through impact investing, through social responsible investing, through ethical investing, and or faith-based or ethical-based investing. So those are basically various type of things that have taken place, right? So basically for me, for us to be able to move forward, these are the issues that we need to look at and we need to research on. And I'm not subscribed to the idea that of the discussions on whether Islamic finance is Islamic, because a lot of people still discussing in terms of whether Islamic finance is Islamic, discussions on riba, discussions on so basic stuff. We need to move forward, and move forward means that our focus, that if we really would like to have Islamic finance to really contribute in accordance or to fulfill the maqasid Sharia, we have to look at the research that find the ways, for example, in order to improve the operation of Islamic financial system, right? And I think mostly, I think the discussion has been done in various parts or in certain segments, for example, it's judgmental in terms of Islamic finance is not really Islamic or Islamic finance Islamic. We have to avoid being judgmental, because judgmental in fact is easy, but to think on how to improve is more difficult, and that requires a lot of work that need to be done. And that the focus that we need to put in the context of promoting Islamic finance. And this is one of the way, one of the area, one of the issues that we look at on top of what has been discussed by, for example, Prof. Hussein on the use of Fintech in Islamic finance and some areas, right, in terms of that has been emphasized by Prof. Zubair, also presentation by Dr. Taufik Taufik, in the context of many exciting that have happened in terms of building up the social finance and make social financial institution become mainstream finance within the context of Islamic financial system, right? So that's what we need to do, right? But for sure, the challenges, we have the challenges in terms of for Islamic finance to move forward, right? And as I mentioned before, when we look at Islamic finance, right, we can, as part of research, of course, we can look at component by components, but in terms of the assessment of Islamic finance and to make our Islamic finance to be complete, we have to look at as a systems, which means we have to look at the integrations of all components, right, of Islamic finance. And I think we're happy to listen that in Indonesia you have micro wakaf banks, and then you have green sukuks that have been presented and so on, and retail sukuks, very surprising development that have happening there, that have been happening there, where the Y generation is the largest subscribers to retail sukuk and so on, which means the effort has been done in order to integrate the formal or business financial system with the social financial system. But in some other countries, they are not, because they still require the harmonization of laws and a lot of things, a lot of coordination that need to be made. I give you, for instance, in the case of Malaysia, for example, we are quite strong in terms of Islamic banking as well as Islamic capital market and takaful, but we are, as compared to Indonesia or as compared to Turkey, for example, we may be quite behind in contact with Islamic social finance. And one of the reasons is basically because of the laws that govern Islamic social finance and the laws that governs business social finance are different. For the business social finance fall under the federal governments, and for many, the Islamic social finance fall under the state governments. So there are less integrations in there. And I think in many different parts, there may be different issues, but then we need to develop as part of challenge that we have to take on how to integrate the whole component of system together so every component can play its own parts, right? So as I said, in many jurisdictions, there are demarcation between corporate and social Islamic finance. And one area that we have to look at, I think, has been touched also by Prof. Kabir in terms of integrating ESG into Islamic finance, right? Because if you look in terms of screening Islamic finance, I think we need to go beyond negative exclusions, right? As well as financial ratio thresholds. We have to look also at non-financial activities that have positive social and environmental impacts, right? And I now working together with Responsible Finance Institute in UK, try to look at what are the implications of integrating ESG into Islamic finance from the retail investors' perspective. Thus, we need to compromise in the context of profit that we get by having, for example, socially responsible Islamic investments, right? Or invest in Sharia compliant firms that have high score of ESG. So try to integrate that positive activities into that. And we almost complete our work that has been done. And the result is very comforting in terms of, I would say, it's time for us basically to come up with basically even a rating criteria within the Islamic finance investment universe, for example, right? So that they can guide investors in terms of choosing or to be responsible, right? Because as I mentioned, when it comes to inclusive growth, it's not only the return that we have to look at, but also the impact on society, right? So because from the Islamic point of view, we derive our satisfactions not only from material well-being, but because but also from the fact that we are able to basically have impact or positive impact to society. So these are the areas that I would say that if I want to pick up from many areas that we have to look at, I will put basically looking at or developing Islamic financial systems, integrating ESG, so that Islamic financial system can be basically the leading system that promote inclusive growth, should be basically the main research agenda, or one of the top 5 research agenda in Islamic finance. And that's what I believe in. And that's why it's part of what I'm looking at right now. Right? So before I end my presentation, just to bring up a little bit, because very interesting that Prof. Kabir bring up journal, article, publications. And I think Indonesia and Malaysia, we emphasize a lot on journal publications. But then recently, both Indonesia and Malaysia are coming out on tops, but not for the right reasons when it comes to publications, but for the wrong reasons. We publish mostly in predatory journals, right? And I think the article that has come up in biometrics, written by the Czech professors, 2 Czech Republic professors, put Malaysia as well as Indonesia on the top 5, right? So it's best, we have a lot of Islamic finance journals, and some of the finance journals basically have climbed up the rank of the quality, right? And also the mainstream journals, despite the fact that they may have reservations, but then I would say more and more basically are opening up and try to look at basically to accept articles, open up to the article in Islamic banking and finance, right? The main important thing, I think I would like to echo what Prof. Kabir has mentioned. We need rigor in our research, and that one very important, right? So that whatever finding that we have, we are convinced ourselves in terms of its policy implications, and we can subscribe or prescribe our policy recommendations in order to improve the Islamic financial systems. Our hopes, or my hope, if not in this lifetime, it may be the next generations, we are going to have a better Islamic financial system that can promote the benefits to the people, to the society, and to the planet. And thanks to all of you. Again, thanks for inviting me. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh, Prof. Mansoor. Short enlightening ending word. Thank you very much. He has been talking about the Islamic finance and inclusive growth and also the challenges. So thank you very much once again. So I think we should not delay it more. Let's proceed to the 6 speakers of today. Cannot wait to hear the another presentation from Dr. Aysan, Professor Ahmed Faruk Aysan, a professor at Hamad bin Khalifa University. He's the PhD director of the Islamic Finance and Economic Program, and he obtained the PhD in Economic from the University of Maryland, USA. He also has been the board member and Monetary Policy Committee member of the Central Bank of the Republic Turkey, and also some other prestigious positions. So good afternoon, I guess, for Dr. Aysan.
Good afternoon, Mrs. Devanti. Thank you very much. Thank you very much for the kind invitation. Assalamu alaikum wa rahmatullahi wa barakatuh to all of you, to all the participants. And I would like to congratulate UNS, University de Sabelas Marat, for the 45th anniversary. Congratulations. I have been following Indonesia for several years now, or more than a decade now. My first visit was in the central bank, one of the central bank visits for about 10 years ago, even more now, I guess. It was an on-fifth meeting or jointly organized with the Central Bank of Indonesia. And since then, actually, I'm closely following Indonesia, and it is great to see the economic performance. And it is especially great to see how Indonesia is contributing to Islamic finance. And this is, I believe, one of those events. Thank you very much. I very much greatly benefited from our scholars, Professor Kabir Hassan, Professor Mansoor Ibrahim, Professor Hussein Abdou, and our market participants. The information that we receive about Indonesia from Dwi Iriyanti from Minister of Finance was great, and also other presentation about how Islamic finance is improving in Indonesia. I guess these practical aspects are quite important, because at the end, if we don't have the markets, then it is quite difficult just to discursively say that, okay, this should happen, but at the end, there should be something happening in the markets, and then the scholars working on Islamic finance will be reflecting this work into their studies and giving feedbacks to the practitioners to improve it further on the green sukuk insurances, on the Islamic social financing issues, on fintech. So it is great that you combine all different presenters together today, also in different parts of the world. And also for the academic contributions, really we have great scholars here, Professor Kabir, Professor Mansoor, and all other presenters. So I greatly enjoy, and definitely on the academic scene, we have a lot to do in Islamic finance, and also in practice, there is huge improvement, prospect, scope for it. But before getting into my presentation, I know I will try to keep it short, my presentation a bit long anyway, and it is about more than 3 hours of presentation. I'm sure the audience might, they are not bored, but I'm sure they are tired. They were all excellent presentation. There were excellent ideas. But I will try to keep it short, and I would like to highlight something which is not relatively highlighted so far. Islamic finance is relatively young discipline in a sense. I mean, it has been around about 40 years, even before. I mean, you can trace it back to earlier years, but let's accept it is mostly in the last 15 years, especially after global financial crisis, Islamic finance became even more important, became more popular. And just after the crisis, we see increasing attention given to alternative ways of thinking about the finance. And definitely global financial crisis of 2008 was a great example for this. And just after the global financial crisis, actually Islamic finance professionals, both in the markets and also in academia, have benefited a lot from this increasing attention. I mean, we start publishing in better journals, the more mainstream journals started to have more special issues, thanks to our colleagues, actually. I mean, these are really great initiatives, and these are really opening up the ways for the next generation, as Professor Mansoor has rightly mentioned, because fortunately or unfortunately, some of the things that we try to contribute in this field is not just for the current generation. We are trying to still set the institutions, set the big heritage for the next generations. But that's why we have to acknowledge the most recent developments globally. This could open up a new avenue for Islamic finance and Islamic economics in general, because this COVID-19 crisis, which is interestingly not mentioned much today, definitely it is mentioned, but I believe this is a big breakthrough similar to 2008 crisis for the Islamic finance and Islamic economics in general. And also, this is quite interesting. After COVID-19 outbreak comes out, we have relatively less opinions coming from Islamic finance, from sustainable finance, from Islamic economic perspective. I believe we have a lot to say. We have a lot to contribute in terms of products, in terms of understanding the changing landscape. I believe, as we observed just after 2008 crisis, there is a new normal. And there is new normal or newer normal after COVID-19. So if we don't understand these global conditions, I believe, our discussions will be within the discipline, not considering the outside of the discipline or the bigger spectrum of global economy. So before starting into my presentation, I would like to emphasize this, because COVID-19 is, inshallah, will be over soon, but will remain with us, especially the implications of the COVID-19 for the banking industry, for the financial industry, will remain with us. Implications for the social dimensions will remain with us. Implications for the education will remain with us. So what are the main implications right now, even we are observing? It is actually similar to what happened after the global financial crisis. Interest rates are low, and they are likely to remain low for an extended period of time. So it is the new normal. The growth will be lower, and it is an break in the global world growth. But even after that, we are not sure whether the the growth rate will come up to the previous levels. And also, during that period, there are certain structural changes. We used to be talking about them, like digitalization, like fintech, like the rise of the Industry 4.0, like all sorts of changes that we used to be talking, but definitely COVID-19 made them even taking place much faster. And it increases the concern about the global wealth income inequality. For example, there was a article by Jamal, for example, just today I saw it at the IMF, one of the IMF magazines. So we are now discussing what will be the implications of this digitalization, this robotization into the labor power. This is also Islamic economics, right? I mean, if the very small fraction of the people benefiting from AI, benefiting from digitalization, but what happens to the rest? It increases the social polarity, not just within the country, but even globally. Just imagine, look at what happened after this COVID-19 crisis. Tesla has gained value. Many Amazon IT companies, but the most recent ones, especially not the very traditional IT companies, gain much more popularity. But we are not in this game at all. We are not people from the Muslim world are not in this game. I mean, we don't have very big influencers like Elon Musk. We don't have, I mean, definitely this is acceptable because I mean, at that, most of the Muslim countries are developing countries, but at least we should acknowledge the importance of these new influencers. Right now, imagine, for example, in the cryptocurrency market, when Elon Musk sent a tweet or support Bitcoin, the Bitcoin prices increases. It is definitely states are important, but in addition to the states, the sentiments are important. And who forms these sentiments are becoming more and more important. And unfortunately, this is also something that we have to think in Islamic finance and Islamic economics. We don't have really big influencers supporting Islamic finance. We have to think about the language issue. I mean, how do we present Islamic finance, Islamic economic ideas? Is it just specific to Muslims, or it is targeting the overall population? So these are all going to be pressing issues for us if we really want to make the Islamic finance, Islamic economy issues to be relevant, not just for our generation, to make it more relevant for the younger generations. Even imagine, I mean, think about this GameStop issue, right? GameStop, right? GameStop, yes, GameStop issue. There is a new generation of people. They are just investing by organizing in certain platforms, in Reddit, and then they are investing just to show a point. So this is something relatively new. In the past, we always think about the markets as places to make profits, and very profit-minded people will be there. But right now, there's a new generation of people. Sometimes they act in certain manners, even though they are going to lose later on, just to make a point. But where are the Muslims in that sense? I mean, where are we? I mean, I'm not saying that we have to do market speculation, but at least we have to understand the importance of this masses, importance of generating sentiments, importance of having influencers, importance of being able to influence the market, not through certain state agencies. I mean, definitely, we should have our central banks. We should have our very good governance structures for our central banks. These are all important. But in addition to that, we, even in affecting the international regulations, even in affecting the certain adaptability of Islamic finance ideas into the global market, I believe we have to understand the younger generation more. We have to be much more relevant for them, and we have to create influencers. I mean, I'm not saying that this is something artificial, but at least, I mean, in my most recent studies, for example, I even appreciate the value of these narratives, appreciate the value of the understanding the sentiments for the financial markets. Even after that, I mean, after understanding the sentiment, the next step is, like it is emphasized in narrative economics by Bob Shiller. I mean, he is quite an influential person. he received the Nobel Prize, before, but he contributed this narrative economics after receiving the Nobel Prize. I believe he deserves another Nobel Prize even for this idea of narrative economics. So we have to all think about this. Otherwise, definitely, within discussions in Islamic finance is fine, but we have to enlarge the markets. We have to increase the number of programs. We have to increase the share of the Islamic financial products. Otherwise, we will be very much, unfortunately, concentrating on a relatively smaller market. the markets are growing as Ms. Dwi Iriyanti has presented. Indonesia is doing a lot. Green Sukuk market is growing throughout all the Islamic world. These are all fine. But at some point, we have to also convey our messages to more mainstream finance. And it is the right time. Why it is the right time? Because the interest rates are low, and they are going to stay low for an extended period of time. So it is the best time to bring out certain values, like the sustainable finance values, like social values into the finance. So I believe Islamic finance people, Islamic banking people, academics, and the practitioners should even be more open to what is happening throughout the world, what is happening globally, and what we can adopt, what we can also contribute. If we are not open for adoption, if we are not open for what is happening for the observations on what is happening globally, we cannot improve Islamic finance. So if we don't understand even the millennials, for example, then we will not be, Islamic finance will not be that relevant to them. Definitely, inshallah, they will be religious people, they will be concerned about Islamic finance, but we shouldn't make them think that Islamic finance is of something of the past. It is something which tells me, tells something about the current life, something about my daily life. That's why I also start focusing more on fintech related issues. in fintech, crowdfunding, peer-to-peer, robo-advisory, artificial intelligence, cryptocurrencies, everything actually, all these new topics, relatively new topics, are all analyzed under the fintech issues. So over the last 5 years, actually, I started having more interest, and my presentation was on more fintech. But thanks to Professor Hussein, actually, he presented most of my work. Very similar ideas. That's why I don't want to get all the slides. Instead, I would like to be more focused and try to give my main messages. Another message that I would like to share with you is the changing landscape in terms of merger and acquisition. As we observe in the Professor Taufik's presentation, even in Indonesia, the Islamic banks are merging. Is it just for the sake of merging? No, it is not at all. At the end, the market is quite influential. Overall, the profitability of the many banks are declining. So I had some slides on that. So let me share that. I will not share all my presentation for sure, given the limitation in time, and I don't want to take too much of your time. So let's make this full screen. You see my presentation, right?
Yes, sir.
Yes. Very briefly, I will try to talk. It's a bit long presentation, but very briefly, I will just touch upon certain aspects because some of them are already being said. The merger and acquisition issue, or I will come to that very briefly. We have to understand fintech more. It's a disruption. It affects all the regions, including the GCC countries. And Islamic banks have actually great potential there. Islamic banks are not lacking behind in terms of fintech. Islamic banks are even more powerful in fintech. These are coming from the reports. For example, I know it from Turkey. Islamic banks listed among the first 5 in fintech developments. They have small companies. They are more accessible to their customers. And this is even better for Islamic banks because Islamic banks' main customer target are relatively middle income, even the lower income people. It is not like the big firms, big deposits they are trying to collect or big loans they are trying to give. In our previous studies, for example, we have shown that Islamic banks are generally more inclined to giving more SME loans than their conventional counterparts in Turkey. And they are much more accessible, so their access to finance issues is much more valid. And this is what the digitalization is trying to bring, right? This fintech issues will even enable us to design products specifically for the customers. All the customers might have different treatment. Instead of having a very wholesaling approach of the banks right now in terms of providing their services, the banks through digitalization, through fintech, will customize the solutions. And one of the properties of the customers are they are religious. They want to consume Islamic products. They have even different degrees of religiosity. Some people are more open to certain type of less Sharia compliant product than the others. So these are all possible, and the Islamic banks seem to be benefiting from that. I had later a digitalization part, which I explained, but thanks to Professor Hussein, actually, he already explained it. I will pass that given the interest of time. But just let me show this. Financial activities on all respects are being affected by the digitalization. Payment services, advisory services, investment trading, lending and funding, insurance, everything is being affected by the blockchain, by big data, Internet of Things. It was already with us even before COVID-19, but after COVID-19 or with COVID-19, we even see much faster developments. Same in all aspects. I mean, similar figures. I mean, there are already some companies doing all these different dimensions. So fintech is more of an ecosystem. It is not like one bank and we open up the avenues. And this is also a very big challenge for the states, by the way. It's not that easy to come up with the champions. For example, you can establish a very big bank, like Mega Bank of Indonesia, right? I mean, it's not just to establish a mega bank, but what is more important is to be able to provide an environment that the fintech companies will be operating and coming up with their entrepreneurship skills and innovations. So I will skip this because in the interest of time, let me show this in the second part of my presentation. Consumers are ready for sure. I mean, they are open to the digitalization. They don't have any doubt about it. But are we ready as the banks? That is the big question. After COVID-19, this is from US, the banks have lost about 36.5% of their profits. And this is pretty much the case in many other countries. In our developing countries, sometimes the inflations are high and this profit declines are being hidden behind. But when we look at the fintech companies, it is the other way around. When you look at the stock market price, for example, after COVID-19, the banks have not recovered, but the fintech companies have even increased their valuation. And again, I mean, this is in all segments, the banking will be impacted. The blockchain, quantum computing, smart machines, some of them will be more immediate than the others, but sooner or later, we're gonna end up with waking up in a completely different world. So we have to be ready. The banks should be ready, regulators should be ready, professors should be ready, because even in our articles, I mean, instead of writing more on banking and finance papers, now they are more the journals are more interested on fintech related issues. And inshallah, we are hoping to have a special issue with different journals emphasizing Islamic finance, just to wake up this potential. But this working environment is quite important. As you see, most of the fintech companies are coming up still in developed countries, even though most of the customers are in developing countries. And Indonesia has a great potential there for sure, with large population, with diverse population. Indonesia is the best location to benefit from fintech. And I'm at the board of the Indonesian Central Bank Journal. I know that Governor Perry, the Indonesian Central Bank people, and the regulators, I mean, even today, I mean, we see very sparse presentations to see the civil servants' capacity at the Indonesia. So that is good that Indonesia, I'm sure, will be one of the star countries of the next decades. Even Professor Taufik's presentation, I mean, it is even good to have such a committee to work on Islamic finance issues. But let me finish with the merger and acquisition case. This was in Professor Taufik's presentation also. The Islamic banks are merging. Not just the Islamic banks. Overall, the merger and acquisition is increasing. This is expected. Just after the crisis, most often time this sort of things happens. Even to hide certain deficiencies, the banks are forced to merge even. But the Islamic banks are relatively smaller in all countries. I mean, we don't have really national champions of the largest banks as being an Islamic bank in all parts of the world. So this digitalization, if the banks, the profit margins are declining, spreads are declining, so intermediation is becoming less and less profitable. So the only solution then is to be able to benefit from the efficiency, and the merger and acquisition will enable this. And this is what we are observing in different parts of the world, even for the Islamic banks, for example. But there is also good news here. When the banks are merged, they are trying to be, they are making it more Islamic banks. For example, in Qatar, recently, Masraf Al Rayyan and Al Haliji Bank is merged. It is announced that it's still undergoing. But Masraf Al Rayyan is an Islamic bank, and Al Haliji Bank is a conventional bank. Once they are merged, they are going to becoming an Islamic bank. So this is a great, and there is another example from the previous years. And the same thing in Bahrain, same thing in Saudi Arabia, in United Arab Emirates. So when there is merger and acquisition taking place, actually this is going to be even increasing the share of the Islamic banks in the region and apparently also in Indonesia. So this is also will be a great potential, especially for the new incomers working on the conventional banks to learn more about the Islamic finance. What are the promising innovations for Islamic finance? It is not going to be banks. It is more of non-bank financial institutions, like investment account platform, which is trying to be exercised in Malaysia, is quite an interesting one. So more of a platforms than the actual providers will be important. And Islamic robo-advisory, Wahid Invest example, for example, that Professor Hussein has mentioned. Peer-to-peer lending will be important. Regulatory tank will be important. I have all stories in here, but I am looking at Ms. Dawanti. She is very concerned about the time. As I tried to promise, I will limit my presentation and I will stop here. Thank you very much for this great opportunity. And I believe this panel will be great to think further about what's going to happen after COVID-19, what's going to happen to Islamic finance. But again, let me emphasize as a major take-home, I mean, we shouldn't be just narrowly focusing on Islamic finance. We should focus on what is happening globally. If we don't understand what's happening globally, we cannot also contribute in Islamic finance, because our contribution shouldn't be just narrowly for the sector, for the existing players. It is still a baby market. It's still a baby industry, baby academia, academic work. We have a lot to offer to the rest of the world. We have a lot to offer to the Muslim populations. They are still underutilizing the Islamic finance. We should benefit more from the sustainability dimension, from the fintech dimension and dimensions. And thank you very much for giving me such an opportunity. And I wish the best for UNS also for the another anniversaries, and hope to be following the good developments in Indonesia. I believe Indonesia with this speed will be an exemplary country in the decades to come. Thank you very much.
Thank you very much, Prof. Aysan. I'm really sorry that I need to limit the time. I know it could be very interesting, but
sure.
Due to the time limit, I think we need to proceed to the next speakers. I'm pretty sure the participants also tired, but also still curious about what's next that we'll be going to talking about. And let me invite the next speaker, Dr. Mariani Abdul Majid from the University Kebangsaan Malaysia. She is Associate Professor in the Sustainable and Inclusive Development Center, University Kebangsaan Malaysia. And I'm gladly to announce to you that she will present also about 15 to 20 minutes. So for Dr. Mariani, it's good to see you. And good evening also. I'm pretty sure it could be late in Malaysia, so platform is yours. Thank you. I'm afraid that you're still in the mute mode, Dr. Mariani.
Assalamualaikum.
Waalaikumsalam warahmatullahi wabarakatuh.
First, I would like to thank the organizer for the invitation and opportunity to talk on this issue. when I was invited for this webinar, I thought it is good if I can look at the research that have been done in Islamic finance. However, my topic is almost similar or related to previous two speakers, so I may skip some of the slides later on. This is the involvement of Islamic finance and banking studies from Scopus journal article and proceedings. In the initial early 2013 to 2015, basically the studies is on bank operation and performance. In the mid-period, there is emergence of consumerism cluster and microfinance cluster. And in recent years, on the right-hand side, we noticed that there is an emergence of trust and loyalty in consumerism cluster and emergence of fintech in microfinance cluster. So, this is the summary. Having a look at previous IBF studies and recent issues, IBF can leverage fintech to improve financial inclusions. For that reason, I will go through the role of IBF in financial inclusion. This is the financial inclusion indicators in banking, the conventional indicators. And we have to consider financial Islamic financial instruments of zakat and cash wakaf in mission of poverty reduction and community development. And this is the role of IBF in promoting financial inclusions for poverty reductions, community empowerment, and for economic growth. This is three main important role of IBF in financial inclusions. And we are going now to look at the role of fintech in financial inclusions. I can skip this slide because this has been widely discussed before. And okay, this is the role of fintech in financial inclusions. First, in deposit customer, where the fintech such as ATM and mobile banking increase deposit, utility bills, paying and cash transfer. Second, on delivery channel, the ATM, point of sale and mobile money transfer, as well as online money payment are widely used in most countries. And third, customer satisfaction, where electronic banking convenience are associated with high propensity to use internet banking. And finally, the usefulness or service convenience. The perceived ease to use, user trust, user technology in banking improve the financial inclusions. So we will look at the financial technology issues and the potential in IBF research. Okay, this is based on Web of Science and Scopus. I look at the research on fintech and banking, and there is vast potential for research on quantitative approach. Currently, qualitative approach are about 62% out of total articles. And we look at the sample. we have a limited number of Muslim countries in the sample for fintech and banking studies. And even the banks, 94% are, of the samples are conventional banks. So there is large potentials for studies in Islamic banking and finance for this fintech research. And when I look at the recent fintech issues in the publications, basically they can be divided into regulatory technology, fintech adoption, fintech model. And from Islamic perspective, they look at the Sharia compliant regulations, digital zakat campaign, halalization, this is the new term, and financial technology adoptions. We also have a digital campaign in terms of Islamic marketing on infaq, sadaqah, zakat, and donations. Also on customer acceptance or satisfaction, impact on Islamic banking, new business model, financial sustainability, social saving, cost efficiency, and extent outreach. Financial technology adoption on zakat and qardul Hassan, musyarakah smart contract, wakaf, Islamic fintech lending, cryptocurrency, blockchain, smart insurance, sukuk, intellectual capital, and wakaf crowdfunding. So these are some of the recent Islamic fintech issues. So now we look at the impact of fintech on banking. We have 5 impact. First, on the consumer perception. Consumer may not fully understand the nature and risk of fintech-related products and services they are offered. At the moment, consumers are vulnerable to the loss of data and may not understand how their data are being used. The second one is on the business model. Fintech has emerged as a result of changing global drivers of value change, which has led to exposing imperfections in the bank's current business models, to emphasize the areas where the change is needed and help inspire such business models for future growth. The third one is operational risk. The increase in the number of people around the world who are not willing to use traditional banking services contributes to the development of fintech that offers the same services but are much faster, cheaper, and profitable than the traditional banks. For banks, these trends mean an increase in operational risk. In terms of regulator, fintech is no more preserving of traditional financial incumbents, and the regulator is no longer preoccupied solely with financial institutions. And finally, on security and trust, users are concerned about exposing their private information and regarding the cyber attack of virus, malware, and hackers. If customer uses the fintech in banking, their information can easily be exposed to other parties and may lose their money and important data. So it causes less trust among users toward fintech and hinders fintech development. So the implication here is taking into consideration the impact of fintech and its challenges, Islamic banking and finance can leverage on fintech to improve financial inclusions. Okay, we now look at the IBF potentials of financial inclusions in terms of crowdfunding. When we look at the involvement of crowdfunding studies, this is based on previous studies. In the early 2000s, the studies are mainly on crowdfunding research in entrepreneurship. In the mid-period, There is emergence of crowdfunding research in entrepreneurial, finance for venture capital, and social capital in funding the organization or institutions. In recent years, crowdfunding studies, there is an expansion of crowdfunding research in social capital. So there is also emergence of challenges faced by crowdfunding, such as asymmetric information and moral hazard. Okay, we now go to the crowdfunding challenges in terms of from entrepreneur perspective. First is potential of poor management, where the entrepreneur may not be an experienced manager, and they may have low ability to create a new radical innovation business. Second is on the agency problem. Entrepreneurs issue more benefit to themselves, and they conduct inappropriate projects and may dilute the return to investors. And third is limited liquidity and collateral. Venture difficult to attract outside capital at early stage of the entrepreneur project because they have limited liquidity and collateral. Liquidity and collateral as well as credit are the signals for project quality. Okay, we now go to the crowdfunding challenges from the investor's perspective. First is investors' perception on project campaign. Investors make decisions either to invest or not depend on companies' information about the projects. Therefore, decision relies also on herding buyers through the social media. And willingness to invest in equity crowdfunding is also negatively affected by risk perceptions on a platform. Okay, on the asymmetric information, this occurs between investors and entrepreneurs when project details are not disclosed at platform. Entrepreneurs take such opportunity to control the business without informing investors on any project progress. And finally, on lack of knowledge, investors are not aware of high business failure risk in crowdfunding. Okay, finally we go to the platform. There is a non-systematic management. Some platform has non-systematic management. Poor management at platform influences the crowd willingness to invest. Fraudulent platform without conducting due diligence for qualities such as vetting and monitoring will explicitly extend the campaign period due to a short fundraise. And on the legal constraint, the absence of great regulation at national and international level might decrease the internalization of funding due to scarcity of investor protection. Due to unregulated fintech platform in some countries, the manipulation issue on customer and fraud may happen. So given the challenges, IBF need to take precautious steps in designing new products. So in conclusion, with the emergence of financial technology, there are vast research potentials in searching for solutions to issues faced by the Ummah. With that, I thank you. Back to you.
Thank you, Dr. Mariani. It's very interesting presentation on you deliver the fintech and financial and Islamic banking and finance also, and the correlation of it. And pretty sure that some question will be arise to your material. And without further ado, let's also proceed to another speaker. And I would like also to remind the participant that you might have a question, just bring up to the chat room, and I will try to deliver to the speaker that you are intended to. So the next speaker is Professor Dian Masyita. Professor of Finance at Faculty of Economic and Business, Universitas Pajajaran Indonesia. He graduated her PhD in Islamic Finance from Durham University, UK, and he also has award as the Best Sharia 2019 by the Investor magazine and the top 10 most influential women in Islamic business and finance 2019 by Cambridge IFA. So very late evening, Ibu Dian.
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam, Ibu. Please, Ibu, platform is yours. You have around 20 minutes.
Okay, thank you very much. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. I start my presentation. It's quite late. This is my first time to present the paper after almost 10 p.m. 11 p.m. Okay. The title of my presentation today, Preparing for the Future of Islamic Finance and Banking in the Digital Transformation. We have a 3 agenda to talk about digital transformation era. It is a crunch time for banking and finance, and the third, financial technology. Digital transformation era, we have a big question. We raise the big question here because we do know that digital transformation is very massive. So the first question, is Islamic banking and finance ready for digital transformation? The second, where are the conventional bank and financial industry now in the midst of digital transformation? The third question, where are the Islamic banking and finance industry now in the midst of digital transformation? And the last question, are they the same direction in the facing in the digital transformation? We all know that the future is unclear, so we have to manage the possibility in the future. This is our life today, digital transformation. Our life cannot be separated from various technological advances that change our behavior in our daily activities. Very familiar for us, GoSend, Google, and so on. Okay, and the internet size in the Southeast Asia in 2025 is so huge. And we can see in Indonesia, the prediction in 2025 is almost 100 billion. Okay, so can you imagine this is our future? How about the financial technology? Economic benefit of financial technologies quite clear. The first, financial stability, the financial inclusion, rise the economic growth, high customer experience, efficiency, reduce information asymmetric, and then create transparency and security. For Islamic financial institution, there are many factors, driving forces for Islamic fintech. First, a regulatory burden, financing gap of small medium enterprises. The third, smartphone growth, rise the fintech ready generation, and changing consumer behavior. These factors drive forces the Islamic fintech. We also have 4 ways to incumbent financial institutions interact with the fintech. The first, collaborate with peer and other stakeholders to explore potential fintech opportunity and develop solution. And the second way, develop fintech solution internally through internal accelerators. The third, partner with new entrants fintech firms whose businesses align with their innovation strategy. And the last, invest in new entrant fintech company or firms, predominantly via venture capital funds and direct acquisition. Okay, we all know we have to create ecosystem to support Islamic fintech for sustainability solution. even wakaf zakat, also we can empower with the digital transformation. We have to support social entrepreneur and subsidizing equity investment. Supporting ecosystems also comprises assets owners, regulators, and Islamic financial institution, entrepreneur and service provider. We have to create a robust regulation, leverage experiences about the impact investing experience, and we have to think globally, act locally, concerned with the to adopt or benchmark with the international best practices, but adapting to local context. Okay, this is the very crunch time at the moment, especially for banking and finance, because the very fast changing in transformation, and we also have a different behavioral from our society because of technology. So we try to identify the current situation. We already know banking, as we know, is old industry. They have the old-fashioned styles and too prudent with the conventional mindset. But we also have the negative side of banking practicing, such as create a global financial crisis in the banking industry is still traumatized for many people. And we also have, we know the future is uncertainty. No one who knows what the certain things in the future. So that's why we have to responsibility to think what happened in the future and prepare for it. So as a CFO or fund manager who has undertaken financial transformation, we already know this digital transformation is very difficult and time consuming. It requires careful planning and resources and can be costly, especially without proper planning. But finance transformation is also critical if finance is to keep up with the changing needs and strategy to the business. So we facing the huge challenges: digitalization, transformational problems, reputation problems, legacy, trust issues globally, etc. So this is our situation at the moment. So we call it is a crunch time. It's very difficult time because we're facing the VUCA, volatility, uncertainty, complex, and ambiguity situation. So what happened in the future? What happened in 2025? I'm interested with the research by Deloitte, how they try to predict 2025, how digital transformation in finance and banking. So we can adopt and learn and try to implement to the Islamic banking and finance. So the technologies needed to reimagine finance. In the finance function, that means working now to get the right people and technology in place to take advantage of the inevitable disruption ahead. That's not likely to happen without a clear vision and strategy for finance in digital world. So we have to create the new vision and clear vision and strategy to face for facing the uncertainty in the future. So we divided into three parts how to finance work in Islamic banking and finance. Islamic finance work, it means Islamic finance will excel in translating business practices and governance model into automated process. So we call it automated process. These are new things. And real-time metrics and monitoring will be indispensable. How about the finance workplace? The workplace in Islamic finance will change. Leading organization will implement finance command centers where small groups of professionals can monitor the full array of process using smart dashboard. chatbots, and voice integration will go mainstream, giving stakeholders the benefit of seamless, intuitive interaction with technology and data. How about the finance workforce? As the workforce is augmented by robots and cognitive agents, Islamic finance will need humans who can build and connect systems that interact with other systems. Some will be traditional employees and others may be contractors or freelancers. In other case, there will be a premium on talent that understand technology and business. So we need a lot of talents or professionals who understand technology and business at the same time. This professional is already short supply. Okay. So we try to predict what happened in the digital transformation in finance in 2025. We divided with 8 prediction. We call it the finance factory, the role of finance, finance cycles, data, self-services, operating models, ERP, and workplace and workforce. Okay, we try to open one by one, but I promise it's quite quick. So how about the finance factory? The transaction will be touchless as automation and blockchain reach deeper into finance operation. So we know cloud-based ERP, automation, cognitive innovation, and so on. We're adding blockchain to the mix will only accelerate this trend. And we also have some find it's interesting to speculate about finance disappearing under the crush of digital disruption, but we don't see that happening. Okay, of course, finance will be likely be linear, but that will mostly be a function of headcount in operational finance. At the same time, expectation for support business finance, we have to provide it in a very, very good way. This different than the previous speaker. I try to make it the micro view of the digital transformation. So how about the role of finance? In 2025, we try to understand with the operation automated, finance will double down on business insight and service, but success is not assured. So whether finance continue to direct the resources currently under its control will be dependent on its ability to add value. So we put it add value here that will require quality insight and exceptional customer service. Companies know that sharing knowledge across disciplines is a good thing, even if it creates headaches sometimes, and learn what it takes to make the most blurring boundaries. We realize now we try to make enter to the complexity of digital transformation in finance. Next, in the future, finance goes real time. Periodic reporting will no longer drive operation and decision. So in the previous year, we already know the forecasting in for 1 month, quarterly, but for the next 3-4 years, all of this is real time. So it's quite challenging. Actual and forecasting can be produced on demand instantly. Traditional cycles become less relevant. What happened in the future? The all distinction between operational and analytical data begins to disappear. Finance organization will still need to meet external demands for cyclical information, but outside investor may also want more frequent performance information. So we know there is a need to provide information real time. So I will make it quick. How about the self-services? Self-services will become the norm in the future. Finance will be uneasy about this. There are plenty of business people who don't need hand-holding when it comes to the basic finance. Activities ranging from budget queries to report production and more will be automated. Over time, smart agents will learn what kind of business information an individual needs and deliver that information proactively. As the future unfolds, data in spreadsheet will be replaced by visually rich information that is intuitively accessible and easy to use. How about the operating models? New services delivery model will emerge as robots and algorithms join a more diverse finance workforce. Think about the integration, freelancer, gig workers, and crowds. Automation provide a new level of managing costs. Companies may see significant disruption with the individual suppliers and their capability looking quite different than they do today. At the same time, we need them to build dynamic cross-functional teams will strengthen finance organizations that are preparing now for what's ahead. As with all changes, good leaders will be essential for navigating. How about the ERP, Enterprise Resource Planning? Finance application and microservices will challenge traditional ERP. Big vendors will be prepared. Okay, you can read more detail about ERP in the future. How about the data? The proliferation of APIs will drive data standardization, but it won't be enough. Many companies will still be struggling to clean up their data messes. Okay, we can skip this. How about the workforce and workplace? Employees will be doing new things in the new ways, some of which will make CFO, Chief Financial Officer, uncomfortable. Finance talent model are evolving quickly with a premium placed on data scientists, business analysts, and also storytelling. This represents a dramatic shift for many finance organizations. Can you imagine our structure of organization can change rapidly in the next 2 or 3 years? To get ready, make sure your new hire represents the future you are striving for. Important qualities including a strong customer service orientation, flexibility, and a good collaboration skill, in addition to technical capabilities needed for specific jobs. And so we can see here 5,000 years later, technology has evolved into a new class of digital tools, reshaping every aspect of the business, not only the business, but every aspect of our life. So as a futurist, we have to try to learn to create what is strategic planning in the future. We try to create the planning 1 or 2 years, we call it tactic. 2 until 5 years, we call it strategy. But if we have a planning 5 until 10 years, we call it vision. More than 10 years, system level evolution. So this is very interesting how we have to create strategy planning for our business, especially for Islamic banking and finance. So no matter what the future you see for your finance organization, one thing is clear, the future is now. If you are going to compete in the digital world, your organization needs to forecast and manage more effectively and become more efficient. So now, today, not only today, 2 years ago, digital financial innovation is already in our daily life. For a conventional company, they have 15 clusters. For 11 Sharia-based companies, they have 5 clusters for digital transformation. So come back to the first question, how about our big questions? Are Islamic banking and finance ready for digital transformation? I think not ready. For the next question, where are the conventional banking and financial industry now in the midst of digital transformation? where Islamic banking and finance industry now in the midst of digital transformation, the answer is they're still struggling to find their way to fulfill the minimum requirement of the digital transformation system and ecosystem. So this is the first, this is the positive, optimist answer. But if we see from negative to self-reflection, maybe Islamic finance and banking ignore the reality about the idea of digital transformation, or they just worry but no action to transform. So conventional and Islamic finance and banking, are they in the same direction in facing the digital transformation? The answer is yes, because digital transformation is only the new tools to adopt or to try to change, because our behavior has changed. Now also technology involved too much in our changing behavior. So thank you very much. If you have any question, you can email me dian@masyita4.ac.id, and thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam, Prof. Dian. It's perfect 20 minutes. Thank you very much for a very exact time that you have to spend. And I think it's very interesting when we're talking about the readiness of the Islamic banking and finance facing what we call as the transformation in technology, and the other way how to do business, how the technology change one and another, and do the business itself, do the changing in the finance industry. And now we're talking about how the digital transformation in the Islamic banking and finance area. So thank you very much once again. Proceed to the another speakers, Dr. Fakarudin Kamarudin, Senior Lecturer at Faculty of Economic and Business, University Putra Malaysia. He got the Doctor for Philosophy in Finance in the University Putra Malaysia also, and got the Young Researcher Award on 2018 category Social Sciences. So Assalamualaikum, Dr. Fakarudin. Can you hear me?
Yeah, I can hear you.
Okay, perfect. So you have around 15 to 20 minutes, sir. Now platform is yours.
Okay, thank you very much. So I will not take a long time. Okay, actually this is I did on this. This is a teamwork actually. We did on the simple research on on the impact of globalization to the Islamic bank activity. Okay, so for the introduction, actually I just want to give a brief on this banking sector that we look at a specific focus on the Islamic bank. And we know that most of the Islamic banks, okay, actually there's no that differentiate with other commercial banks. They are not practiced for the riba or interest, where they are combined with the Sharia. And then even though the Islamic banks is what we call that quite new with this conventional bank, but they are competitive because they want to compete and survive with the other financial institutions. And of course, they need to have what we call that, they also have their main objective, the same with other financial institutions, to maximize the profit and the shareholder wealth. And in order to get this objective done, they need to be productive. So in our research, we focus more on the productivity here. We focus or we highlight on the productivity area here. And so we should know what are the concept of the productivity. So based on the Complement 1986, the authors define that the productivity as the relationship between the amount of one or more physical outputs to the essential physical input used in the production. So basically the productivity is using the concept of the efficiency by using the minimum input in order to produce the maximum output. And of course, if the bank have the high productivity, it will lead to the high bank profitability. And then since we look at the impact of the globalization to the productivity of the Islamic banking sector, so we need to know that what is the definition of the globalization that I put in my studies. So the globalization here can be defined as the global upsurge of economic and financial integration, the various forms of the governance and the interconnections of the ecological and social development. And the globalization that I focus here consists of three areas, which are the economic, social, and political. And each of the areas can be measured or can be represented by the 6 dimensions, where 2 dimensions on the trade and financial for the economic. And for the social globalization, there consists of 3 components, which are interpersonal, information and culture, and political for the political globalization. So total, we have 6 dimensions for the globalization. These are all the variables that we use to represent of the globalization. And that's why we try to extend the prior study by using the productivity, using non-parametric frontier analysis, NPI, Moncrief Productivity Index, that looking on the Islamic banks that covers on the 3 main hub Islamic regions on the Middle East, Southeast Asia, and South Asia, by investigate the determinants of the bank-specific macroeconomic factors and also the globalization that may lead to the productivity of Islamic bank over the years 2008 until 2017. And we found that they have something we can highlight the issue here, where we need to know the objective first, the objective of the bank, which before we need to have, they need to maximize their shareholder wealth by maximizing their profit. And of course, to maximize the profit of the bank, they need to be productive. So the issue here, how to make sure that they can achieve for the maximum level of the productivity, or we can say that they can have their progress in their productivity level by identifying, by looking at the impact of their bank-specific and macroeconomic determinants. So this is the main issue, because most of the studies found that the discrepancy of the impact of these bank-specific and also the macroeconomic determinants. And the second issue, we can also look at the globalization, because this is the what we call the factors or the determinants that have the ignorance before. So this is why we want to highlight on this issue with to the impact of the Islamic bank productivity. So we have 2 objectives in the study. First, to ascertain the potential bank-specific and macroeconomics determinants, and also to examine the impact of this globalization to the Islamic bank productivity. So when you come to the literature review, we found that most of the prior studies have been done. A lot of the studies on the factors or the bank-specific, macroeconomic determinants to the bank productivity in general. So we can hypothesize here all these bank-specific and macroeconomics can significantly influence to the productivity level of the banking sectors, where they can find that the negative and also negative relationship. And for the literature view on the impact of the globalization, we can see here most of the prior study done on the bank profitability or the performance of the bank. So we can conclude that most of the components of the globalizations have the significant influence or impact to the bank productivity. So based on these all literatures, okay, we can find that the gaps. First, identifying the determinants that may lead to improve their productivity in the context of Islamic banks are limited, because because most of the studies they did on the bank performance, on the commercial bank, and very few that look at the productivity of Islamic bank. And the second one, the gap on the impact of the globalization, specifically on the Islamic bank productivity, is relatively scarce. Then we look at the data methodology. Okay, for the source of data, I think from the PitchConnect. Okay, PitchConnect, I collect we connect for the financial information from the Islamic bank, and then the World Development Indicator (WDI) is for the macroeconomic conditions data, and QF index is for the globalization that consists of 6 areas that cover for 203 countries, 23 variables measuring different aspects of globalization, and consists of 12 different data sources. And for the sample of this research, it consists of 106 Islamic banks in 18 countries that are taken from 3 main regions of the main hub Islamic banking and finance, which Middle East, Southeast Asia, and South Asia. And we also exclude the investment bank, insurance, and also a finance company in order to maintain the homogeneity of the sample and in order to avoid any potential bias. And then for selection of the years, we select from 2008 until 2017. And why we stop until 2017? Because we look at the KOF index database, they have embargo for 2 years. So for 3 years actually. But if you go now to the website, you can find until 2018. But most of the countries, the data is not complete yet. So that's why we stop until 2017, because most of data complete up to 2017. And for the methodology, I use 2 stages actually. For the first stage, for the dependent variables, total factor productivity change, I'm using the non-parametric DA Moncrief productivity index under the intervention approach. And for the second stage, to identify the impact of the bank-specific, macro, and also the globalization determinants by using the MPRA multiple regression analysis, and also for the estimation method, I'm using the generalized method of moment. And this is the variables that I'm used for the first stage of analysis that consists of output and inputs when I run to get the total factor productivity change index. Okay, these are the models that I use to run for the productivity. Okay, the TFPCH is the index, the value of the index I'm going to get to run for the second stage of analysis. Then for the second stage of analysis, these are the variables where you can see here. This is the TFPCH for my dependent variable that I obtained from the first stage of analysis. And the independent variables consist of 3 components, which are bank specific, that measured by the 6 variables, and macroeconomics condition that measured by 3 variables, and the globalization that measured by the all 6 dimensions variable to represent for the globalization. And this is the models that I'm going to use for that we use to run for the second stage of analysis to identify the impact of the bank-specific, macroeconomics, and also the globalization that may lead to the impact of the higher or lower of the productivity level on the Islamic banking sector by using JMM, go through to the test of Hassan and Abdul test. So this is the result discussion. Okay, so we can see generally, okay, for the geometric mean, this is for the first stage of analysis of TEA. So in general, you can see that within the period of study 2007-2017, the percentage of 11.2%, which is 0.888 under TFPCH, you can see that it's regressed because it's less than 1 here in total factor for the change of all bank. Could be attributed to the 11% of 0.890 decrease in technical or technological change, as the efficiency change seems to have the decline in rate of 0.2%, which is this rate 0.998. So the decomposition of efficiency change here into the pure technical chain and scale efficiency components indicate that the decrease in efficiency change may mainly attribute to the managerial factor rather than scale. So means that for the efficiency change here, the factors that lead to the lowest of the efficiency change or decreasing in the efficiency change are because of the managerial part, not because of the scale of the size of the banks, Islamic banks in the sample. And for the second stage of analysis, when we run for the generalization analysis, we can see that in conclusion, we can find that they have 2 variables for the bank specific that have significant influence to the productivity of the Islamic banks, which are size and credit risk. And the size shows that they have positive significant influence to the total factor productivity change, and negative relationship when we can find that for the credit risk to the total factor productivity change. And you can see that the globalization here, all the 5 dimensions, okay, so all the 5 dimensions, except for the political culture, okay, it's not significant. So you can see all the globalization dimension, which are the trade, financial, international, informational, and cultural, that represent of the social and also the economic globalization significantly positive, okay, to the productivity of the Islamic bank. So this is just conclusion. I can say that there are only two variables on the bank specific that's influences our bank in my sample, and you can say that I can answer by my question: does the globalization significantly impact to the bank productivity? Yes, I can say yes, because 5 out of 6 dimensions of the globalization significantly influence to the productivity of Islamic banks that consists of the trade, financial, interpersonal, informational, and also the cultural globalizations. So, of course, the studies can be expected to have the policy implications to the several parties such as bank, investors, regulators, and also researchers. Okay, that's all from me. Thank you very much.
Thank you very much, Dr. Fakarudin, for such insightful material on how you see the globalization and the effect of the productivity of Islamic banking and finance, and quite interesting approach on how you measure the use of the measurement that you use in your works. So let's proceed to last but not least speaker for today's webinar. He's the faculty member of Universitas 11 Maret at the Faculty of Economic and Business. He got a doctor in banking and finance from Université de Limoges, France, and his research interest and teaching is in Islamic banking, finance, and econometrics. So let me bring up to you Dr. Tastaftiyan Risfandy. So very late evening, Pak Andi.
Okay, thank you, Iriyanti. Well,
yes.
Almost
so,
midnight.
So please, what platform is yours?
Okay, yes. Let me try to
Trustee,
my...
you can speak from your sleeping mode, okay?
Okay, Professor. Thank you. Okay, well, I try to be very fast on what I will present today. It's about well, previous presenters, most of them already present and overviewed very greatly with Professor Kabir Hassan about the many things in Islamic finance, and then most of speakers have also explained about the fintech in this or digital era and Islamic finance and banking. And now I will try to highlight again about how actually Islamic banks they could proceed into the successful era. And the thing that I would like to highlight here is about the Islamic banks governance. Okay. Well, as all of us, especially Islamic scholars, know about the Islamic banks governance, the things that make Islamic banks differs to the conventional one is about the existence of the Sharia boards. And in majority of Islamic banks, the Sharia board itself is present side by side with the board of directors. Well, both of them, they have a similar monitoring and then advising function in the bank, but actually they have distinct focus. The Sharia boards, they focus on the Sharia practice in Islamic bank and make sure that all Islamic bank practice is according to the Sharia standards. Well, the board of directors would like to ensure that the bank practice, they have to the directors and then the management, they have to do many things, the investment and daily basis operation in order to maximizing shareholder value. And implicitly, actually, the role of Sharia boards is not just the supervising the Sharia practice, because they have also involved with the BOD in the daily operation maybe. So they have to also advising the BOD and management about how Islamic banks, they can contribute to the economic development and the promote or foster the core values of Islamic banking itself. And actually, the SSB, the Sharia board, they are also important because the recent discussion from some empirical papers, they suggest that the SSB is not only to ensure Sharia practice, but also actually they have a significant impact on bank performance. Why? because the presence of the reputed Islamic scholar in the Sharia board, they could maintain the Islamic bank stakeholder confidence, which indirectly lead to the performance of Islamic banks. So maybe in some part of the world, or maybe in our perspective, the thing that we choose Islamic banks is because they have the prominent Islamic scholar. If they have a prominent Islamic scholar, so it will motivate us, it will ensure us to choose Islamic banks. On the other hand, if we know that the Sharia board, they contains some scholar that, for instance, it's not really have a good reputation in the Islamic, in the fatwa, or in the Islamic scholars, so maybe we will not choose that Islamic banks. So that means that the position of the Sharia board itself, it will not only make sure that all of Islamic banks activities is comply with the Sharia, but also it will make a public confidence about the performance of Islamic banks in the future. Okay, and then from my research, I find that Sharia board, they have many advantages. I mean, I find that the extent on which equity financing or partnership financing, which all of us know that about Mudharabah and Musyarakah, actually it is actually affected by the presence of the Sharia boards. So what I find is that the duality of Sharia boards and the existence of Sharia department in the Islamic bank, they are related with they are related with the presence of the Sharia board itself. And I also did some preliminary research about the Sharia board remuneration and bank stability. My primary motivation is that because a lot of research, they already investigated about the governance in Islamic banks and how they impact the stability, how they can have an impact in the performance. But the remuneration itself, or the compensation that is received by the Sharia boards, is not really investigated by many researchers previously. So what I find is that there is at least a positive association between the remuneration received by the Sharia board, and then it means that the adequate or proper remuneration in Sharia board, it could significantly increase the stability of Islamic bank, because it will motivate them for higher Sharia monitoring, for the more extensive monitoring in Islamic bank. And the other important things to note about the independence issue of the Sharia board itself. So as we know that the Sharia board, actually they should be independent, because they will give a fatwa, they will give like a Sharia screening, they will give a Sharia review for Islamic bank. So meaning that they have to be independent from the bank itself. But on the other hand, actually they are remunerated, and they receive salary from the bank.
Pak Andi, I'm sorry, I think you got muted now. Would you please to unmute? Okay, thank you.
Okay, so many parties, many Islamic scholars, they believe that actually the existence of Sharia board is not really independent, because as I said, they are remunerated and receive salary from a bank. And this argument is also strengthened by my finding that the impact of internal Sharia department is negative on Islamic bank profit unless sharing financing activities, and this is because the member of Sharia department is technically not different from other employees. So if in Islamic bank they have a Sharia department, and the Sharia department have a duty to assist the Sharia board in Sharia related activities, so actually their position is just similar to other employees. What does it mean? It means that the existence of Syariah department over there is not really effective, and even it can decrease the performance of Islamic bank itself. The other thing that we have to note is that this is the last slide actually from my presentation, and I take this note from the paper of Professor Kabir Hassan, written with Hussein et al. 2016. This is published in Arab Law Quarterly. It's written there is that about analyzed from 1,141 position of Sharia board scholar, it's shown that the busiest scholar holds approximately 85 position in Islamic financial institution and 12 position in standard setting bodies. And the less busy Sharia scholar, even they held 14 position in Islamic financial institution. So if we know things like this, it would be very difficult for the Sharia scholar to give like independent review, because there are seats in many banks, and how could person, if they sit in more than one bank, they can monitor the Sharia practice in that bank effectively. So it kind of things that never can be accomplished. And high-profile SSB member often sit on the boards of 50 to 70 banks. And also the important things that maybe raise critics from many parties is that the enhanced lifestyles of the ulama, like a higher remuneration scheme, has presented them with a significant conflict of interest, and some accuse them of overstepping the Sharia. So these some things of the existence of Sharia boards that we have to note. And in general, we know that the Sharia board itself makes the Islamic banks, they quite differ to the conventional bank. And also the Sharia board existence in Islamic bank, they have many positive on the development of Islamic bank itself. But also there are several things that we have to note, and maybe in the future, the Islamic scholar, the regulators, they can develop a mechanism that make the Sharia board become more acceptable for all parties, and also the Sharia board, they can be a part of Islamic bank that can lead to the bright future of Islamic financial system. I think that's all, Devandi. Thank you very much.
Thank you very much, Pak Andi. It's very interesting approach on how you see the governance of Islamic finance, on how to optimize the works of the Islamic banking in general itself. So I'm pretty sure it's been so late in Indonesia and in Malaysia also, but I think we need to proceed to the question and answer session. We have a lot of questions by the participant, but for sure we cannot bring all of the questions. So let me read the first question that will be answered for Professor Kabir Hassan. So Prof. Kabir, you have a question from Mr. David. He asks, I would like to ask your opinion. Do you agree that Sharia-based economy is more resilient toward crisis, and why? Thank you.
Sorry, say it again. I missed the question.
I would like to ask your opinion. Do you agree that Sharia-based economy is more resilient toward crisis, and why?
Well, I don't think that it's in crisis. Actually, every crisis really leads to a betterment of it. So we have to really do some soul search. What happened? This usually in every field, you have the theory developed first, and then you have the practice. But we have started with the practice, then we started developing theory. So we have to learn from it what we have done wrong, so that, and we are putting too much emphasis on Islamic banking. Islamic banking is just part of the picture. Islamic economy, Sharia economy is a bigger picture. So no, it's not in crisis. And actually people like you, we need you, to bring it forward to whatever shortcomings it has. whatever we're doing wrong, we can make it correct.
Okay, thank you very much, Prof. Kabir, for the answer, and I really hope it satisfies the questioner. The second question goes to Professor Hussein. Professor Hussein, are you with us now? So I'm afraid he is away. So let's proceed to the next question. The next question is addressed to Ibu Dwi Iriyanti. Ibu, it's question from Latifa. How serious the central and the local government in regarding green sukuk and what the real contribution to society and the environment?
Yeah.
Please, Ibu.
Okay, thank you very much. Of course, the government is very serious in issuing green sukuk and how we utilize the proceed of the sukuk itself. When we issue green sukuk, we have obligations not only in developing what we call green framework, but post issuance we have to provide and publish the impact report of the green sukuk itself. So it means that we have to be serious in issuing green sukuk because we have to show to the investors that what we use for the fund from the investor goes to the projects, and the project itself has impact to the society and give impact to reduce what we call carbon emissions. So that's the serious that we have done. Also, we want to show that the governments have a strong commitment in combating the climate change as we ratified the Paris Agreement since 2016.
Okay. So the issuance of sukuk, particularly the green sukuk, is like a bring to the real what,
yep.
right? Yeah.
And we will continue to issue a green sukuk in this year in the global market as well as in domestic market.
So thank you very much, Ibu. The next question addressed to Dr. Taufik. The question is yours for now from M. Dirga. Pak Taufik, Indonesia is the home of the world's biggest Muslim population. Yes, the Islamic finance has not been developed. What the challenge that inhibit the growth of the Islamic banking in Indonesia as the biggest Muslim country? And what does it purpose in terms of the Islamic finance? Thank you very much.
Yeah, thank you, Mr. Dirga. The purpose of Islamic financial, of course, the first one is to provide the preference of the most population of Indonesia, and the second one, although Islamic finance is not exclusive products, in exclusive programs, but it's also inclusive, and it can be used by other rather than non-Muslim population. We have a sort of survey that although although non-Muslim population themselves also have a preference on Islamic finance products. I think that's some of the objective and goals of Islamic finance.
Okay, thank you very much, Dr. Taufik.
Dr. Taufik, can you read your chat message? I sent you a chat message, Dr. Taufik.
Yes, Prof. I've already read. I will contact you soon.
Okay, inshallah.
Thank you very much. Okay.
Thank you very much. So the next question goes to Professor Aysan. Dr. Aysan, are you with us now? So Prof. Ahmed Faruk Aysan, the next question goes to you. Are you still there? Okay, I think we need to proceed to the next question.
Diwanti, you are a superwoman. Yes. You're a superwoman. You're running it for 5 hours You're not tired.
No, 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 no. It's been such a big honor for me to have this kind of discussion to all of notable speakers for sure. I'm learning a lot. So Dr. Aysan with us now. So we have the question for Professor Aysan. What do you think about the merger of the three Islamic banks in Indonesia? What are the prospects of for the merger of the three Islamic banks? Maybe the question is related to that you talk about the change of the landscape of
Yes.
the
Actually, it is quite a good coincidence. We are having a discussion also with our students to work on the merger and acquisition overall. In the region also, this is a big issue. Most likely merger and acquisitions will increase, but I believe it is not just about COVID-19. It is more of a structural thing that even after COVID-19, we will observe more of merger and acquisition. And I believe, I don't know specifically for these banks, for Indonesia, but the banking will be more concentrated because right now the competition is not defined with a number of banks. It is defined with the competition is not between the banks, between the fintech companies and the banks. So especially as I mentioned, and because of the declining interest rates, many of the banks have to increase their efficiency. And for this reason, I even expect more merger and acquisition to take place within Islamic banks and also within the conventional banks, and also having Islamic bank and conventional bank, and they became more likely to be an Islamic bank. But I don't know specifically for Indonesia, but I expect more of this merger and acquisition to take place.
Okay, thank you very much, Prof. Ahmed. The next question is will be bring up to Professor Mansoor. Prof. Mansoor, are you hear me?
Yes, yes.
Okay, thank you very much for staying late. I'm pretty sure it's been so late in Malaysia now. So the question incoming from Pekanbaru, Indonesia, from Mr. Ahmed. Can innovation be applied in Islamic financial institution? Because some of studies forbid innovation in Islamic financial institution due to opposition to muamalah fiqh. If possible, what kind of innovation that can be implemented? Thank you, sir.
Okay. I try to understand in terms of the question that has been asked in terms of forbidding innovations, because the word innovation itself, what that exactly means. Innovations, if we translate from the Islamic term that people use, that innovation is bid'ah, for example. So I'm not sure whether he referred to that one or not. But innovation is to come up with new things based on what is based on what we have right now. It's not a bad thing, it's a good thing. And in fact, in terms of financial products, for example, we lack innovations. And that's why at the end, you look at any financial product of Islamic banks, it kind of becoming imitations of the product of conventional bank. So you can take a look at basically for every conventional products, we tend to have also the corresponding Islamic banking product which modify conventional and label it as Islamic compliant. Is that part of criticism that has been made by most people, right? So basically we need innovations, innovation. And in fact, for Islamic bank to grow or Islamic finance to grow, we have to basically the stage of imitating, for example, the stage of following or become a follower of conventional bank. That stage already has, we have exhausted those stages. We have to leapfrog and then basically, and in order to leapfrog, one more thing, we have to base our product on the principle Islamic finance that basically make it distinct from what we have out there for conventional finance. I think that one also has been highlighted by Prof. Kabir Hassan in the context of the lack of innovations. In fact, we need innovations. Now, once we say that we need innovation, I think the solution or starting point that we need to look at is basically go back to our education systems. Right? Now, I think Islamic finance institution, we have so many. 77 countries as what has been presented in terms of the report by Refinitiv. And I think INSEF also have done, the report is done together with INSEF. 77 countries have offered Islamic finance. But then if we look at Islamic finance educations worldwide, for example, there are missing elements, right? Because we tend to treat Islamic finance separately, while in fact Islamic finance is part of, is only a portion of the whole Islamic economy's ecosystem. So when we train people for the Islamic finance, we forgot about entrepreneurships, we forgot about marketing, we forgot about leadership, we forgot about managements. So you look at any Islamic finance educations, even especially the postgraduate level, we forgot all those elements. So we produce Islamic finance expert that only know Islamic finance, but less in terms of leadership, less in terms of entrepreneurial ability. So we have to look back at our Islamic finance education by treating Islamic finance not as a separate component that contributes without linkages to the whole economy or to the whole Islamic economy ecosystem, right? So those are very important part, and that will promote innovations, I would say. Thank you.
Thank you, Prof. Mansoor. And I think it will be the last question for today's session because it's already late. And the last question is will be for Prof. Dian Masyita. Ibu Dian, and the question is coming from the OJK, from Papa Eddie. The spirit of SDG is no one left behind. Our problem today and the future still same. How to alleviate poverty. Meanwhile, the Islamic finance institution have to struggle with the fast-growing digitalization in finance. My question is, how do we use Islamic finance and economic to solve this problem at the same time to make finance Islamic finance institution riding the wave safely? I think you're still in mute mode, Ibu.
Yeah.
Thank you.
Thank you very much. The question, Pak Edi from OJK. It's a very interesting question, but it's not easy to answer because we are struggling to educate and literate about zakat and wakaf and Islamic social finance since maybe 20 years ago. But until now, it's still very limited collecting of zakat, even wakaf. But maybe we don't have any numbers. What happened in the grassroots, people of family give zakat without sending zakat to the zakat institution or wakaf institution. They try to donate directly to the poor. That's, I think, the main reason. But maybe we don't have any data about that. So poverty is the big issue, the complex issue. It's not easy to solve the problems only from Islamic social finance, zakat, infak, sedekah. Poverty is related to the education, related to the ecosystem, to the policy, and the way of thinking. So it's very complicated factors involved for poverty alleviation. Zakat, wakaf, sedekah is only part of the solution. Maybe only 5-10%, but the big I think education is very important. But education takes very long time to change the situation, the poverty. Maybe that's my answer. It's not easy. We have struggling to combat the poverty in Indonesia.
So I think that would be the end of the webinar today. I would like to say thank you very much to all of the notable invited speakers coming from various countries. Thank you for the dedication, for Indonesian speaker along with the Malaysian speaker that committed to staying late. And last but not least, so thank you very much also to 100 participants who willing to stay until the end. So thank you very much. Do not forget to fill in the attendance list that already put by the committee in the chat box. So you will get the certificate along with the recording of the session and also the material from the presenter also. So on behalf of the committee, I'm the Chinese C, will say thank you very much once again, sign out, stay safe everyone, and really hope to see you in the next event. Assalamualaikum warahmatullahi wabarakatuh.
Where is Irwan, the culprit? He just put us in for 5 hours and then he's gone.
No, Dr. Irwan joining our meeting, but not in the breakout room, not in our room, but he following our discussion.
Okay.
Yes, for sure.
Okay.
So thank you very much, all of the inviting speakers. Once again, sign out and assalamualaikum warahmatullahi wabarakatuh.
Actually, I want to thank Irwan too for inviting all of us. It was good.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, everyone.
Waalaikumsalam warahmatullahi wabarakatuh.
Assalamualaikum to everyone. Thank you, Irwan.
Thank you. Bye.
Terima kasih, Bu.
Kasih, Bapak.
Mansoor.
Yeah,
Kabir.
Yeah.
I'll send you later.
Ahmed,
I'll
Aysan.
send you soon.
Yeah, please.
Okay. Thank you very much.
Thank you. Assalamualaikum.
Professor Kabir, Professor Mansoor, Professor Hussein.
Assalamualaikum to everyone. Hey, Dusty, I'm going to see you soon, right? You're getting ready for that. Okay, inshallah. By the way, is this music halal? Mansoor? Professor Mansoor, is this music halal?
Yeah, for us, halal.